Chat. 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 What's up, chat? You got a Fed interest rate decision today. It's probably what we should be streaming about instead of Tesla. But that's okay. That's okay, chat. I wonder... I don't think it's came out yet. I think it comes out here in like 20 minutes. What's up, Moose? How you doing, man? How you doing, Moose? What am I doing? I can just go to this. I don't think it's out yet. Yeah, it's not out yet. It comes out here in like 20 minutes. And then the conference. I guess we'll watch that too. Maybe I should, Sim Day? Nice. Let's go. Let's go. I'll just get rid of the Gamestop part of this. But I need to change the tags too. We'll just leave it as Tesla. Or actually, I'm going to see how many people are streaming the interest rate decision. There's a lot of people streaming the interest rate decision. Then I won't worry about it. But usually, the Federal Reserve streams used to be the biggest streams we did back in the day. But then everyone started streaming it. Yeah, there's too many streams. There's a lot of Tesla streams, but there is a fuck ton of Federal Reserve streams. Yeah, I'm good on that. That's crazy. That's actually insane. That's a lot of streams. Yeah, actually not that many. But I'm not going to change the title. We're good. We're good. We're good. I'm not too worried about it. Stream about Tesla today. Tesla, Tesla, Tesla. LaCroix, LaCroix. Tesla, Tesla. Bottle water? Bottle water? Tesla, Tesla. LaCroix, LaCroix. I don't know. Does anyone get that reference, or am I just speaking into the void? Mooma! What's up, Mooma? How you doing? LaCroix! LaCroix! Oh, the earnings call doesn't start till quite a bit later, though. That kind of sucks. That's okay, though. That's okay. That might be a good thing. Maybe there won't be as many streams online for the earnings call. We'll see. Got a lunch meeting. Then I'll be back to hang out. Alright, for sure, Moose. We'll just be chilling. We'll just be chilling. No plans today. I guess there is an article to read on Twitter. The Robinhood CEO did like a... Because I guess today is the 5-year anniversary of GameStop's trading halts or something like that. And Vlad Tenev wrote an article. It's a short little guy. It's a short little guy. Ugh. Good afternoon from Tijuana. What's up, Mark Macia? Hope you're doing good. God bless you. God bless you, Mark Macia. Appreciate you stopping in. So, I guess we'll read this. I guess this could make like a decent video. It's just not that long. I don't think it's going to be very long for me to read this. I don't know how good of a video it'll be. But we'll try. Vlad Tenev, the Robinhood CEO, wrote a GameStop article on Twitter. It's basically just a reflection of the 5-year anniversary of the GameStop trading halts, because 5 years ago today, GameStop got halted, and when the stock went from like $10 to over 400 or something like that. I don't know if today's the day it actually hit 400, but It says, what happened and how can we assure it never happens again? 5 years post Gamestop. 5 years ago today, Robinhood and other brokers were forced to halt buying of several meme stocks, most memorably GameStop, in one of the strangest and most visible equity market failures in recent history. There's a lot of hate for this, but in a lot of ways, if you really think about it, it was good they turned off the buy button because a lot of people would have lost a lot of money. I think there's a lot of people out there that think if they were able to buy GameStop, they would have made this like life-changing money. But as from what I remember, they didn't halt the buying until like the stock was already at $100, $200. So there was really no room for like exceptional gains. So anyone who's upset that they turned off the buy button probably just isn't that educated, or they just believe something that's really not actually real. Because the only way you made life-changing money on GameStop or any of those meme stocks is if you are already positioned before the stocks ever skyrocketed. If you were buying at $100, $200, there wasn't much gain there, so I don't know why people are so upset about this. They actually saved you in a lot of ways. A lot more people, there's already a lot of people that have lost a bunch of money from the meme stock rally, but I would say if they didn't turn off the buy buttons, more people would have lost. And I think the argument is, people think if they didn't turn off the buy button, the stock would have kept going up. And that's a fair argument, but I just don't, I don't know. I don't know about that. So maybe, but I don't think that's a good argument for the amount of people who would have lost money if the buy button didn't get turned off. The underlying cause for the one-day pause was a set of complex cleaning house risk management rules designed to mitigate the risk of then 2-day-long settlement period for U.S. stock trades. One-day pause? It was like a week or two. It was like a week or two. What do you mean one-day pause? That's crazy. It was way longer than 1 day. The rules required brokerages to put up huge amounts of cash to reduce the risk in the days between a meme stock trade and its settlement. What happens when you combine slow, outdated financial infrastructure with unprecedented trading volume and volatility in a small number of stocks, massive deposit requirements, trading restrictions, and millions of unhappy customers? Retail investors who wanted to buy GameStop were understandably livid. In their eyes, Robinhood went from the hero to a villain. Barely 1 month into my role as the sole CEO of Robinhood, I had my first major crisis to manage. After many of our team members worked around the clock for 72 hours to solve the immediate issues and raise more than $3 billion to shore up our capital reserves, we had some time to pick our heads up and assess the situation. I vowed to do everything in my power to not just improve Robinhood's resilience in these situations, but also push for improvement to the overall system to help ensure nothing like this happened again. We intensely advocated for real-time settlement of U.S. stock trades, and this led to shortening 2-day settlement T+2 down to T+1, arguably the most consequential accomplishment of the otherwise horrific Gensler era of the SEC. But in a world of 24-hour news cycles and real-time market reactions, T+1 is still far too long, particularly when you factor in that it really means T+3 on Fridays or T+4 on long weekends. Our quest for real-time settlement continues, and it has proven elusive in the traditional equity markets, with a slew of legacy stakeholders to manage. It's clear that we need a new approach. That's where tokenization comes in. Oh, tokenization? Oh man, really? He's gonna get into tokenization? Tokenization refers to the process of converting an asset like a stock into a token that lives on a blockchain. Among other benefits like lower costs, native fractalization, and 24/7 trading, moving equities on-chain in tokenized form allows them to benefit from the real-time settlement properties of the blockchain technology. No lengthy settlement period means a much less risk to the system and less pressure on both clearinghouses and brokerages, so customers can freely trade how they want and when they want. We've already seen how this can work. In Europe, Robinhood has made available more than 2,000 tokens representing U.S.-listed stocks. These tokens give European traders exposure to U.S. equities, including dividends. In the coming months, we're planning to unlock 24/7 trading and DeFi access. which will allow investors to self-custody their stock tokens, with possibilities for lending, staking, and more. As the advantage becomes increasingly clear, I believe it is inevitable that the US embraces this technology. We're already seeing progress here. Major US exchanges and clearinghouses have recently announced plans to tokenize equities. Without regulatory clarity, such efforts are moot. Fortunately, we now have a timely opportunity. Current leadership at the SEC is embracing innovation and facilitating experimentation with tokenization. Additionally, Congress is actively considering the Clarity Act, an important piece of crypto legislation, which requires the SEC to continue down its path of embracing this technology and to write modern rules for tokenized equities. Legislation would ensure that the subsequent commissions cannot abandon or reverse the progress achieved by this SEC. By working with the SEC and pushing for sensible U.S. equity tokenization guidelines via Clarity, together we can ensure that trading restrictions like we saw in 2021 never have to happen again. Let's seize the moment and unlock real-time settlement for retail traders once and for all. Well, that wasn't bad. Oh, 7 minutes. 7 minutes. Oh, not a good video. Not a very good video. Not a very good video. I guess I should have went through the comments or something. Okay. I guess everyone's sold. Where the hell is everyone, bro? It's like GameStop went up, and since that day, there's been nobody here, bro. I think everyone's sold. That's crazy. That's crazy. I think everyone's sold, bro. That's great. That's great. Kind of interesting. Kind of interesting. Go from 20, 30 people in the stream to 5. Pretty interesting. Pretty interesting. I guess bury buying was bearish. I think people probably just took profits because they've been sitting flat for the past, I don't know how long, 6 months basically. Well, 3 months. 1, 2, yeah, 3 months. I'm sure a lot of people sold. Who knows though? It's only been 12 minutes. We did just start the stream, but still, it's very weird. It's very weird. I guess let's see what news we got. You got Microsoft, Meta, and Tesla, IBM, ServiceNow, Las Vegas Sands, Waste Management, a lot of earnings. Southwest Airlines, a lot of earnings after hours. A lot of big companies too. Levi, Whirlpool. A lot of earnings, Let's see, market's basically flat. Healthcare is down 1%. Tech's up a little bit, but everything's pretty much flat. It seems like they're just waiting on the. You'll see a big move as soon as this interest rate decision comes out. Whether it goes up or down, who knows. Obviously, I'm more bullish on the whole market as a whole, so I'm gonna assume that everything's gonna go up. But who knows? Maybe bears win for once. Seems like bears never win, but maybe their time. Maybe today is their time. Damn. Another insider buy on Under Armour? That's crazy. Oh, hey, that's the same one I saw the other day. Small insider buy on Intel. Who bought? The CFO? Pretty small buy, though. I thought this was interesting. Zurcher Cantonal Bank. They sold their whole GameStop position, 121,000 shares, but they turned around and bought a brand new call position, 131,000 shares. So I thought that was weird. I don't know why they did that. Pretty weird. 14,000 new position, couple whales, smaller whales. Obviously, that big put position we saw the other day, that's pretty massive. They finally updated the short interest. It's only down 0.1%, 0.01%. The short interest hasn't moved, which is pretty interesting. Pretty interesting. GME is only cared about when the volatility is hitting the price action, it seems. Yeah, that's what it seems like. I think that's just how it goes with any stock, though. I just like when all the people are here and we got some conversations going on in the chat. People are asking questions and stuff. It does get boring when it's when I have to figure out how to do it. When I have to figure out everything, it does get lame. So it just kind of sucks when people aren't here. Interested to see how Tesla investors react to the topic of GME. There's probably not going to be that many people here. There's a lot of Tesla streams, so I'm not expecting a huge stream today. Who did that reposition into calls? I don't know. Yeah, some bank. Some bank. I don't even ever look at who it is usually. Doesn't really matter. Zurcher Cantonal Bank. Whatever the hell that is. That's why I don't ever look at the name, because most of the time it's something I have no clue what it is. It's really never like an individual investor. It's always a bank or something. Microsoft earnings, yeah. You got a lot of earnings. Meta. Bunch of earnings. A bunch of earnings. Time to flip a coin. Exactly. That's how you do it. That's how you do it. Or you strangle it. You know, you buy a cheap call and a cheap put and hope one of them hits. Hope the stock overreacts in either direction. You can do that too, but the likelihood of winning is... I would say betting one side is you're more likely to win betting one side than to bet both sides. Because in my experience, usually you only make like if you put $50 on the call side and $50 on the put side, you usually only make like $100. So you just make the money back on whatever side you lost on. So it's usually better to just bet on one side, but it can work. I've seen it. I've done it. You just have to have like a real overreaction and a solid continuation. Not much news today. Kind of whack. Oh, I think the interest rate decision's out, though. Let's see. I'm pretty sure they're leaving it flat. Yeah, they're not doing anything. I didn't really need to look that up. Didn't really need to look that up. We can read the statement, though. Available indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low, and an unemployment rate has shown some signs of stabilization. Inflation remains somewhat elevated. Committee seeks to achieve maximum employment, blah, blah, blah. Supports of its goals, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. In considering the extent and timing of additional adjustments to the target range for the federal fund rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. Committee is strongly committed to supporting maximum employment and returning inflation to 2%. In assessing the appropriate stance of monetary policy, the committee will continue to monitor the implications of incoming information for economic outlook. The committee will be prepared to adjust the stance of monetary policy as appropriate if risks emerge that could impede the attainment of the committee's goals. Committee's assessment will take into account a wide range of information, including readings on labor market conditions, inflation pressures, inflation expectations, and financial and international developments. What's up, Kenny? How you doing, bro? How you doing, Kenny? Federal Reserve voted unanimously to maintain the interest rate paid on reserve balances at 3.65. As part of its policy decision, the Federal Open Market Committee voted to direct the open market desk at the federal bank to execute transaction in the system open market. Undertake open market operations as necessary to maintain the federal funds rate and target range of 3.5% and 3.75%. Conduct standing overnight repurchase agreement operations at a rate of 3.75%. Conduct standing overnight reverse repurchase agreement operations at an offering rate of 3.5%. With a per county party limit of $160 billion per day. Increase the system open market account holdings of securities through purchases of treasury bills, and if needed, other treasury securities with remaining maturities of 3 years or less to maintain an ample level of reserves. Roll over at an auction all principal payments from the Federal Reserve's holdings of treasury securities. Reinvest all principal payments from the Federal Reserve's holdings of agency securities into treasury bills. In related action, the board voted unanimously, blah, blah. Oh, establishment of the primary credit rate at existing level of 3.75. So, nothing there, really. Did the market react? I don't think the market reacted. That's pretty rare. Usually the market reacts, but maybe you'll see a reaction during the call or during the press conference. Let's see. Look at a chart here. Oh wait, that's Gamestop, so. It reacted a little bit, but that's nothing. That's nothing. Damn, S&P over 7,000 is crazy. Damn. Yeah, it'll probably keep hitting new highs. I'm not bearish, so there's a lot of people out there that are bearish, but not me. I'm not that guy. NASDAQ almost hit all-time highs today. Honestly, I mean, we'll see. If it starts selling off, that'd be crazy, but I wouldn't be surprised to see the NASDAQ hit an all-time high by the end of the day. Assuming the market's not going to sell off. I just don't see that happening. Doesn't mean it can't. Doesn't mean it can't. I just don't see it. I'm just not a bearish guy. I like making money, so I'm not bearish. What's up, RS? RS, what's up? Jared, how you doing, Jared? How you doing, bro? Hope everyone's good. Saying not much reaction. I guess I'll leave the chart open for a little bit. We'll keep an eye on the S&P. I don't really ever watch the S&P, so could be a good time to watch it for a second. My audio crapped out? Well, my audio's good, it looks like. I think we're good. Stream could have lagged or something, but it looks fine to me. Here's what changed in the new Fed statement. I don't think anything changed. Couple names. Solid pace. Oh, that's actually a really notable change right there. The last whatever this is, open market committee statement, economic activity has been expanding at a moderate pace was last time. Now it's solid pace. So that's really good. Job gains have slowed this year, remained low. So that, that's not a good change. The unemployment rate has edged up through September. They got rid of that. Shown some signs of stabilization, so that could be positive or viewed as positive. To me, this is the most notable thing. Economic activity has been expanding at a solid pace. It's no longer moderate. Solid pace. That's good to know. But other than that, no changes of no real notable changes. See, CNBC is useful sometimes, just not often. Varley! What's up, Varley? How you doing, bro? Ruben! How you doing, Ruben? How you doing? Hope you guys are all good. Hope you guys are all good. Shout out to William, too. God bless you, William, and RS. Hope you guys are doing good. So, I guess we're going to watch Jerome Powell today. I don't know. Are you guys okay with that? Jerome Powell. Mr. Powell. Not the most exciting thing, but we gotta watch Jay Powell's last few things, you know? He's not gonna be around for long, unfortunately. Am I barking puppy? Yeah, bro. I'm barking puppy. I'm Kevin Gill, bro. You didn't know that? Me and Keith are brothers. We hang out all the time. He bought me $30,000 Back to the Future Nikes, bro. You didn't know that? The Air Mags are ugly. Yes, they are. But they're like 30 bands, so they might be ugly, but that's a flex having those shoes, bro. That was a flex having those shoes. My father's name is Jerome. Is it Jerome Powell, though? I mean, today it might be. Today it might be Jerome Powell. If the stock market starts going up, you might be calling Jerome Powell your father. You never know. You never know. That was clearly where Roaring Kitty wearing the Nikes, bro. I was dying. I saw that. It does not look like Kevin. It definitely does not look like Kevin. It does look like potentially Keith. I don't even remember where I saw that picture. Yeah, this. The ring. Yeah, there's the ring, but they got the same watch. Well, I think that's a little bit different of a watch. It's more the stature that gives it away for me. Like Kevin Legend's like tall and skinny. Keith, he sits at a computer all day, so he's gonna have a similar build to me. And who would just casually wear like $30,000 shoes for the fucking lols, you know? Like there's nobody's buying $30,000 shoes to actually wear them. The only person that would do that is the fucking meme lord himself. You in a stream daddy pal? Yes, sir. What's up, Hugh G? Hope you're doing good, bro. I just watched Dumb Money. Long overdue. Is Kevin actually a jackass as portrayed in the film? I don't know. I don't know, bro. Actually, I haven't watched Dumb Money in a long time, so I don't have a recollection of that. But what's up, Prakash? Hope you're doing good. That's Ryan Cohen. The watch on one hand in the pocket is weird in that photo. Watch on the hand in the pocket. Oh, the double watches. It is a weird photo. It is a weird photo for sure. Why do you say that though? The watch on the hand in the pocket is weird. The pocket hand, you don't really see a watch band. Well, that is a good point. Are we analyzing tinfoil right now? He's in the bathroom of a Chili's. You think Rowan Kitty's eating at Chili's? I don't know. That's debatable. Maybe. Chili's baby back ribs. I want my baby back, baby back, baby back, baby back. Chili's. Yeah, you're right. That is kind of weird, huh? There like is no band. That is weird, huh? I'm like zoomed in on his fucking cock. Yeah, let's look at Keith's cock, bro. Oh, it's fucking massive, dude. You see how massive his cock is, bro? It's fucking hung. Hung like a horse, bro. Hung like a motherfucking horse. Yeah, that is kind of weird. It almost... I feel like I can see the band, but you're right. There kind of is no watch band there. That's very odd. That's very odd, huh? He's got some dry-ass hands, bro. Somebody get that boy some lotion, dude. This boy's hands are crusty, bro. He's got some fucking crusty-ass hands, bro. He got a Richard Mill on this watch, though? Is that Richard Millie? It kind of looks like an Apple Watch, but it also kind of looks like... I think it's just an Apple Watch. I don't know. Can you imagine if he had the Richard Mill on? It's like, yeah, I'm just gonna casually wear this $2 million watch, you know? No big deal. No big deal. The watch face is just floating over the shirt. Yeah, that's kind of what it looks like. It doesn't look like there's a band there. Patriots hat, why the hat shaped like Harley Quinn's head? I don't know, bro. I don't know. Are we about to deep dive on this photo, bro? We deep diving? It does have like a clown hat. I don't know. I don't know, bro. I don't know. Pretty interesting. Pretty interesting. You got Powell in like 15 minutes, though. Mr. Jerome. Jerome on the track. AI. Maybe. That'd be hilarious. This looks like a bougie bathroom. Yeah, it kind of does. Enhance. Just putting shit on for the sake of it. Yeah, I don't know. I don't really I just don't want to put too much weight on tinfoil. I just don't want to put too much weight on tinfoil, personally. What? Dunkin' launches Valentine's Day menu with Toxic X inspired drink? Nice. That's interesting. Valentine's Day is already coming up. That's crazy, bro. That's crazy, bro. Insta post from Kevin about running. Wasn't that old though? Grateful for Intel shitheads not being in the chat. Yeah, well, they usually don't stick around. It's very rare someone sticks around. They just come in here for the earnings call and then leave. But yeah, those Intel guys were weird, bro. They were weird. Some of the Seagate guys were kind of weird too, but they were chill. I was just in a bad mood yesterday, so I wasn't having it. I wasn't having it. YouTube CEO Neil Mohan explained how they're trying to make YouTube perfect for creators. Let's see. Started 26. Mohan announced that the plan to tackle AI slop with a number of changes, putting the focus back on real creators. Thank God, bro. I hope so. I hope that's something they're actually gonna do. Fuck AI, bro. I hope they take every AI video, ban every AI creator. Like, I hope. That would be a blessing, bro. Neil Mohan says YouTube's trying to be perfect. YouTube CEO expanded on that in interview with CNBC's Leader Playbook series, saying they're constantly working to make the platform perfect. Jobs really build the stage, and what I mean by that metaphor is it's got to be the best stage, best technology, best experience. It's got to have the best sort of place for viewers to sit, the seats, all around have to be perfect. But the people that are on the stage are our creators. It's noted in there, been plenty of criticism toward Mohan and YouTube's continued use of AI. We haven't seen anything positive on YouTube as a result of these AI tools that Neil speaks so highly of. They're a fucking scourge right now. Imagine Neil would have no problem stepping down and letting AI run YouTube at some point, am I right? It is a problem in his interview where all this stems from. It really highlights just how delusional this company is under the leadership of Neil. What? I want to watch that interview. Product first, dollars follow. Place a few big bets. Huh. I'm gonna watch that later probably. That could be good. Maybe. Could be good, could be bad. Seagate jump. Yeah, they jumped after hours yesterday after the call, or like during the call. The stock went up like 10% or something like that. I was surprised that the stream wasn't bigger yesterday. Like, Seagate's already up like 5x in the past few months. And then the stock went up, or the stock was down after the earnings report, but during the earnings call, the stock ripped 10%. I was very surprised there weren't more people. It was one of the slower earnings streams we've had with the company up that much. Came out this morning with a barking puppy post that had the same reference. Oh, I saw the runner one. You're talking about I know what you're talking about. The movie review. I also saw a video of like Kevin in 2023, like running on a track or something like that. I thought that's what you were talking about, but yeah, the movie review, I saw that. Neil is virtue signaling. They won't do shit. I hope they do. I hope they do, bro. I mean, it just sucks for discoverability for someone like me if I have to compete with all these AI channels. Like, my channel's big, but it's not that big. So competing with AI channels with AI views, it sucks. So it would be nice if they cracked down on AI and botting and stuff, because it would benefit me a lot. At least I think it would. Roblox streamer fears losing millions in Robux after classic cosmetics are removed. That sucks. I thought there was an article I wanted to read. Maybe it was just that YouTube one. Google agrees to pay $68 million after lawsuit claims it secretly listened to your conversations. Is there a new Beast Games episode out? I keep seeing Beast Games stuff. Beast Games episode releases. Yeah, episode 6 came out today. Nice. I'm excited for that. I love Beast. Beast Games is really good so far. It's not as good as the first Beast Games, but it is really good. It's hurting their ad revenue bottom line, so they're reacting. Let's see if they actually take action. Yeah, I would imagine having all these AI content creators and like botted views and stuff is really bad overall for every platform, not just YouTube. They're not gonna a lot of the ads I see on YouTube are just fucking AI. Like, it's not even like real companies. It is kind of weird. You would think if they would crack down on all the AI and the botting, maybe they would get some real advertisers on YouTube. But it doesn't. It's a lot of AI shit. I mean, my ad revenue personally is down the most it's ever been. I used to make a lot more on YouTube. Even when I wasn't posting videos, I was making a ton more. Yeah, I don't know. Oh, Scott Pilgrim EX just skyrocketed to the top of my winter game list. Scott Pilgrim, huh? A new Scott Pilgrim game? Capcom leans into Leon's Hot Uncle makeover. Old Kickstarter for tabletop game reveals the work. What? Scott Pilgrim EX. March 3rd? That could be a good game. I don't know. Scott Pilgrim EX, huh? It's a good movie. It's a good movie. Scott Pilgrim. I haven't seen the whole movie, but what I have seen is really good. Every Wednesday I'm out sick. Watched it. I watched it on my secondary Prime Video account, so I can't pretend like I didn't see it and watch it with my girl so I don't get in trouble. That's so funny. Oh shit, that's hilarious. Hugh G doing God's work, bro. Keeping the woman happy. I love that. That's so funny. That's hilarious, bro. When robots hit mainstream, they will really bot. They're trying to strike a balance of growing viewing volume through AI inflation and then tapering it off to realize ad revenue potential of organic growth. Interesting. That's an interesting perspective. They're trying to strike a balance of growing viewing volume through AI inflation and then tapering it off to realize ad revenue potential of organic growth. There's levels. They're level to this shit. All right, I'm just gonna assume there's no news today because there really isn't. Jerome's gonna be coming on here in a minute. Mr. Jerome. Mr. J. Bow. Just my thoughts. What do you think? I don't know, man. I don't know. I don't really have any thoughts on that. I wish I did. I just don't. To me, most of the things on the internet are fake, and I feel like there's more bots and more fake views than people want to admit. So it's hard for me to think that inflating like the views and stuff through AI is a good thing. I don't know. I feel like it would be better to just be more transparent. But I guess, if the organic views are that trash and there's not that many people on their website as they're claiming, even, with like 50% being bots, supposedly, if it's more like 60, 70, 80% are bots or something, I get why they're doing it, but I still think transparency would be better. A lot more of your real creators would be able to grow, and you would have real viewers, not just botted views. And I think having real dedicated viewers on your platform and growing your creators with real dedicated viewers, not just botted views, I feel like in the long run that would be better, but I don't know. I don't know. But not a lot of people are looking out in the long term. They're just trying to get their bag now for while the hype is there. Agreed wholeheartedly. These companies are aggressive capitalists, though. Yeah, I just feel like the long term isn't going to be that great for them once all this, if the botting problem is as bad as it potentially actually is. I just feel like the long term isn't going to be good. But I don't know. They're smarter than I am. They're the multi-billionaires, not me. But I think Jerome's coming on here in a minute. So we'll watch Jerome. I'll throw up some split screen here. I'll throw up a split screen so we can watch some a little bit of stock on the side. Even though I don't feel like GameStop's relevant to the interest rate decision at all. Probably should be watching the SPY, but I have this chart. And SPY's trying to go down. We'll see. We'll see what happens here. I don't know which one to watch. I'm gonna go with this one. No, I'm not. I'm gonna go with the one that has... Oh wait, he's on. We gotta hurry. He's live. Where's the best one? This one. Wait, is he not live? Where is he? Where's our boy, J. Powell here? There he is. There's our boy. There's our boy, J. Powell. There he is. Let's go, Jerome. All right.
Good afternoon. My colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. The U.S. economy expanded at a solid pace last year and is coming into 2026 on a firm footing. While job gains have remained low, the unemployment rate has shown some signs of stabilization, and inflation remains somewhat elevated. In support of our goals, today the Federal Open Market Committee decided to leave our policy rate unchanged. Having lowered our policy rate by 75 basis points over the course of our previous 3 meetings, we see the current stance of monetary policy as appropriate to promote progress toward both our maximum employment and 2% inflation goals. I will have more to say about monetary policy after briefly reviewing economic developments. Available indicators suggest that economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. The temporary shutdown of the federal government likely weighed on economic activity last quarter, but these effects should be reversed as the reopening boosts growth this quarter. In the labor market, indicators suggest that conditions may be stabilizing after a period of gradual softening. The unemployment rate was 4.4% in December and has changed little in recent months. Job gains have remained low. Total non-farm payrolls declined at an average pace of 22,000 per month over the last 3 months. Excluding government employment, private payrolls rose at an average pace of 29,000 per month. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including openings, layoffs, hiring, and nominal wage growth, show little change in recent months. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index indicate that total PCE prices rose 2.9% over the 12 months ending in December, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. In contrast, disinflation appears to be continuing in the services sector. Near-term measures of inflation expectations have declined from last year's peaks, as reflected in both market and survey-based measures. Most measures of longer-term expectations remain consistent with our 2% inflation goal. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 3.5% to 3.75%. Since last September, we have lowered our policy rate 75 basis points, or 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should help stabilize the labor market while allowing inflation to resume its downward trend toward 2%, once the effects of tariff increases have passed through. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. Monetary policy is not on a preset course, and we will make our decisions on a meeting-by-meeting basis. To conclude, the Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you. I look forward to your questions.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to ask that, you attended the Supreme Court hearing last week on the Lisa Cook case, and Treasury Secretary Scott Bessent criticized that as political. Can you say why you attended and what you would say in response to the Secretary's criticism?
So let me start with, I don't respond to comments by other officials, whoever they may be. It's just not appropriate to do that. I will tell you why I attended. I would say that that case is perhaps the most important legal case in the Fed's 113-year history. And as I thought about it, I thought it might be hard to explain why I didn't attend. In addition, Paul Volcker went to a Supreme Court case famously in, I guess, 1985 or so. So it's precedented, and I thought it was an appropriate thing, and I did it.
Great. And then just quickly follow on the job market. You mentioned last month that the household survey might be distorted, and you also mentioned the potential for overcounting jobs, which would suggest that we're still in a negative hiring pace. So do you see the drop in the unemployment rate as solid? And what's the basis for saying that things have stabilized? Thank you.
So, yeah, really two questions. One is, so we're getting through the distortions in the data from the shutdown. However big they were in November, they're smaller in December. So we're getting to a place where they're no longer material. They're still there, but it's a tweak here and there. The reason why we changed the statement, let me pull it out, was simply, it used to say that judges that downside risks to employment rose in recent months. So we saw, data coming in which suggests some signs of stabilization. I wouldn't go too far with that, but some signs of stabilization. There are also some signs of continued cooling. And so we thought that was no longer an accurate description of the data. In addition, the outlook for economic activity has clearly improved since the last meeting, and that should matter for labor demand and for employment over time. So for those two reasons, we thought we would take that language out of the statement.
Nick.
Nick Timrose, The Wall Street Journal. Chair Powell, you've generally avoided engaging with political controversies directly, and the video statement on January 11th was a departure. What made this different, and are you concerned it could draw the institution further into political debates?
So today I'm simply going to refer you to the statement that I made on January 11. I'm not going to expand on it or repeat it. So I'm just not going to. This is really about the press conference and the economy and what we did today. But
imagine being able to build an app with your name on it.
Screw you!
Meet Base 44.
Venus?
I have nothing for you on that today.
Frickin' ads, bro.
Michael McKee from Bloomberg Radio TV. Have you made a decision on whether you would remain as a governor of the Federal Reserve? And if so, would you tell us what it is? And if not, when might we anticipate a decision?
No, and I really, once again, have nothing for you on that today. That either.
Why would you want to leave it all under the circumstances?
Again, I don't want to get into this. It's not something I'm. There's a time and place for these questions, but not something I'm going to be getting into today. Thank you.
Thank you. Claire Jones, Financial Times. Thanks a lot for taking my questions. In another one that might, lead to a similar answer. We've seen quite big movements in the dollar over recent days. What do you think is driving the U.S. currency lower? And have you been at all concerned just by the extent of the volatility we've seen this week? Thank you.
So, Claire, as you probably know, we don't comment on the dollar. Really, the administration, especially the Treasury Department, has the job of oversight over the currency and exchange rates and all that. We don't comment on that. It's not our role. So
not my job.
But, I mean, what's your view on the market movements? I mean, what do you
not
think behind
my
them? Is
job.
it asset managers diversifying? Is it?
Yeah, I just don't. We don't talk about the dollar. We don't talk about what moves it around. It's just not appropriate for us to do so. Really, the Treasury Department.
These people's questions fucking suck, bro.
Their role, their bailiwick.
Ask about the economy.
We stay off it. We do monetary policy and some other things, but we don't comment on the dollar. Sorry.
Neil.
Hi, Chair Powell. Neil Irwin with Axios. Obviously, no SEP in this meeting, but in light of the slight firming up of the language around growth in the labor market in the statement, should we assume that the timeline for any further rate cuts is pushed back compared to what people might have thought in December?
Well, first of all, if you look at the incoming data since the last meeting, clear improvement in the outlook for growth. The data have come in, and sentiment, the Beige Book, everything comes in suggesting that this year starts off on a solid footing for growth. Inflation performed about as expected, and as I mentioned, some of the labor market data came in suggesting, we're evidence of stabilization. So it's overall a stronger forecast, really, if that's your question. I'm not sure I answered your question.
But in terms of timing or pacing of any additional easing?
So we haven't made, what we'd say about this was that after this meeting, after the 3 recent rate cuts, we're well positioned to address the risks that we face on both sides of our dual mandate, and we'll continue to make our decisions meeting by meeting based on the incoming data, the implications for and the outlook and the balance of risks. Haven't made any decisions about future meetings, but the economy is growing at a solid pace. The unemployment rate has been broadly stable, and inflation remains somewhat elevated. So we'll be looking to our goal variables and letting the data light the way for us.
Steve.
Steve Leisman, CNBC, and sticking with questions you might answer, thank you. You had previously, I believe, described the current policy rate being at the higher end of neutral. And if you look at the longer run, the SEP and the longer run rate, 16 of 19 officials are actually below there on their long run. Is the Fed still in a process of bringing it down towards a middle range of neutral? And what would it take to get there?
So the count I did was that 4 of the 19 were at or above that. Maybe I missed by 1, but I thought it was 4. And if you look at the dealer survey, it was 10 out of 58 where we're at or above. So you're right. It's the higher end of the range. What we say is it's within the range of plausible estimates. This is the higher end of that range, but so for some people they think it's neutral. I think, and many of my colleagues think, it's hard to look at the incoming data and say that policy's significantly restrictive at this time. It may be sort of loosely neutral, or it may be somewhat restrictive. It's in the eye of the beholder, and of course no one knows with any precision. Is that, you had a follow-up?
I get what you're saying, but some officials have described the Fed being in a mode of bringing it down eventually over time. Are you still in that mode, or is this a place to hang out?
Yeah, no, I would say if you look at the SEP from December, most people had additional normalization. But at the same time, we've done a lot of the process of normalizing. A good piece of it is done with 75 basis points, and before that, 100. It's 175 basis points we've cut since we began cutting in September of 2024. So you've moved now to, Fed funds is running just a little below 3.65%. So you've moved a good way, and we think we're well positioned here to watch how the economy performs, look at the data. We're not making decisions about future meetings, but we do think we're well positioned after those 3 cuts to let the data speak to us.
Amira.
Rosh. What's up, Rosh?
Thank you, Chair Powell. Mara Moakley from Bloomberg News. To what extent did the committee discuss the possibility of cutting at this meeting or in March? And how are you all thinking about the conditions that would merit another rate cut? Is there broad agreement on the committee about what it would take?
So there was broad support on the committee for holding today. Broad, I would say, including among non-voters. So that's where that was. Of course, some people did want to cut and dissented, but committee pretty broadly for holding today. We're not trying to articulate a test for when to next cut or whether to cut at the next meeting. What we're saying is we're well positioned as we make decisions meeting by meeting, looking at the incoming data, evolving outlook, and all that. And we're in a position where we still have some tension between employment and inflation, but it's less than it was. I think that the upside risks to inflation and the downside risks to inflation have probably both diminished a bit. So, we'll be looking at that. It's about how you weigh the risks to the 2 goals and how big those, and quantify them. And so there are different views on the committee, and, we'll find our way forward as the data evolve.
Yeah, you gotta love economics to watch this. It's definitely
thank you,
not
Mr. Chairman. Edward Lawrence
entertaining.
from Fox Business. Has the effects of tariffs already moved through the economy on prices?
A lot of it has. So basically, there are many different estimates, and they're all highly uncertain. But most of the overrun in goods prices is from tariffs. And that's actually good news, because if it weren't from tariffs, it might mean it's from demand, and you know, that's a harder problem to solve. We do think tariffs are likely to move through and be a one-time price increase. So most of the overshoot, if you were to take that out, you'd get, and you would, I mean, inflation, core PCE inflation is running just a bit above 2%, x the effects of tariffs on goods. And the other good news is, if you look away from goods and look at services, you do see ongoing disinflation in all the categories of services. So that's a healthy development. So that's what's going on. The expectation is that we will see the effects of tariffs flowing through goods prices, peaking, and then starting to come down, assuming there are no new major tariff increases that are begun. And that's what we expect to see over the course of this year. If we see that, if we see that, that would be something that tells us that we can loosen policy. Also, if we see something that suggests that the labor market is not stabilizing, that in fact the downside risks reemerge, or the data just get worse, we'd have to look at both of those. We have a two-sided mandate.
If I could, if President Trump does pick a new Fed chairman before May, what does that look like? How would you work with that person, and what does that transition period look like?
I don't have anything for you on that. That will depend on Congress's actions and things I can't speculate on.
No, don't leave, Powell.
Howard
Don't
Schneider, Reuters. Thank you
leave.
for taking our questions. Given the changes in the statement and all you've said so far, is it fair to describe risks to both sides of the Band-Aid as roughly balanced right now? And is the next move necessarily down?
I'd say that the upside risks to inflation and the downside risks to employment have diminished, but they still exist. So there's still some tension between the mandates. Are they fully in balance? Hard to say. And we think our policy's in a good place. I've just discussed reasons why we might change our policy, and we'll just have to see how the data lead us.
I'm wondering, you a minute ago you said you felt expectations were consistent with your mandate. That the 2 and the 10-year break-evens have moved quite notably in the last couple of weeks, I believe. Is there any concern on that front?
I mean, I recently looked at all of the both survey and market-based short-term inflation expectations have come way down. They were in a good place at the beginning of last year. They spiked around Liberation Day, and now they've fully retraced in the last few months. So that's very comforting. And the longer-term inflation expectations have remained in places that are very consistent with 2% inflation over time. So expectations have been solid, and they reflect confidence in the return to 2% inflation.
Andrew.
Apologies if this is a little bit repetitive, but in the past you've said that the reason you cut rates was that the risk to the labor market was greater than the risk to the inflation side. Is that still true?
We haven't made. You're right. We saw the labor market weakening, and we acted, and I think that was the appropriate thing to do. We will always act to address what we see as the economy moving away from our goals. Risks to both of the variables are a little less. I think the upside risk to inflation, again, a little bit less, and the downside risk to employment, a little less. I just would say that I'm not making a judgment about how, one of them is more at risk than the other, just that the risks to both of them have diminished.
Okay, thanks. BIS wrote a paper last summer which concluded that global investors were hedging their dollar exposures in ways that previously they hadn't because of policy uncertainty. Do you agree with BIS?
We really don't see much at all about that whole story. There's just not a lot of data that suggests that there's much to that.
Thanks.
Anna. Anna Swanson with the New York Times. Can you talk more about what you would need to see in the labor market to conclude it's time to resume easing? Do you need to see further deterioration in the labor market, or would it be enough for inflation to soften?
So we'll always be looking at both things. And so there could be combinations, infinite numbers of combinations that would cause us to want to move. Certainly, a weakening labor market would be an argument for loosening. But what's happening with inflation? If inflation were at the same time getting worse, you just have a very difficult situation there. So we'll be looking at both. Clearly, a weakening labor market calls for cutting. A stronger labor market says that the rates are in a good place. We'll have to be making similar judgments, too, on inflation, though.
And if inflation does pick back up and the labor market doesn't show further signs of deterioration, is there a chance that you could raise rates rather than simply remaining on hold? What would you need to see to consider hiking?
We don't take things off the table, but it isn't anybody's base case right now, anybody's base case, that the next move will be a rate hike. But, ultimately we'll do what we think is the right thing. But that's not where people's expectations are right now.
Victoria. Hi, Victoria Guida with Politico. I wanted to ask, you've talked in the past about concerns about the U.S. fiscal trajectory, and we've seen in the Japanese bond market a lot of turmoil recently, in part due to concerns over their fiscal and long-term economic outlook. So do you worry that the U.S. could at some point find itself in a similar situation to Japan, whether for fiscal or demographic reasons?
Over time, you've seen that U.S. rates have remained they haven't moved a lot really for a while, but they haven't moved a lot because of what's been happening in Japan. So it's more of an over time thing. The U.S. federal budget deficit is, uncontroversially on an unsustainable path. The level of debt is not unsustainable. It's very much sustainable, but the path is unsustainable. And the sooner we work on it, the better. But right now we're running a very large deficit at essentially full employment, and so the fiscal picture needs to be addressed, and it's not really being addressed. So that's important. I'm not in any way connecting it to some sort of near-term market event, but ultimately it's something we'll have to deal with, and that in the end game, that's where you wind up, is in some kind of a difficult thing. But that's not where we are. It's not where Japan is either, but it's certainly not where we are right now.
Does it reduce the effect of your rate cuts that longer-term rates have overall not really budged that much?
I wouldn't say that. The thing is, technically, higher longer-term rates means less accommodative financial conditions. But remember, many things move longer-term rates. It's not mostly what happens on the short end. There can be effects of longer-term rates from our moving our policy around, but it's much more assessments of the fiscal path and fiscal policies and risks and things like that move the 10-year around. You can look back at and find periods where we've been very actively moving the policy rate over the course of a year, and over the course of that year, the 10-year is exactly where it started. So there's not a tight link between 10-year rates and the overnight rate.
Elizabeth. Thanks so much, Elizabeth Schulze with ABC News. Republican Senator Tom Tillis, who sits on the Senate Banking Committee, said he will block any Fed nominee, including the chair, until this investigation into you is resolved. Bro. Do you support this move by the senator? And what conversations have you had with the senator?
I've got nothing for you on that.
More broadly, what would happen to American households if the Federal Reserve loses its ability to operate independent from politics?
So really, the point of independence is not to protect policymakers or anything like that. It just is that every advanced economy democracy in the world has come around to this common practice. It's just an institutional arrangement that has served the people well, and that is to have a separation between to not have direct elected official control over the setting of monetary policy. And the reason is that monetary policy can be used, through an election cycle to affect the economy in a way that will be politically worthwhile. So this isn't, I'm not talking about the U.S. context, this is every advanced economy democracy of any size. So it's a good practice. It's pretty much everywhere among countries that look at all like the United States. And I think if you lose that, first of all, it would be hard to restore the credibility of the institution if people lose their faith that we're making decisions, only on the basis of our assessment of what's best for everyone, for the wide public, rather than trying to benefit one group or another. If you lose that, it's going to be hard to retain it. And we haven't lost it. I don't believe we will. I certainly hope we won't. But it's very important, and the reason it's important is that it's enabled central banks generally not to be perfect, but to serve the public well.
You're confident it can maintain that independence at this point?
Yes. I mean, I'm strongly committed to that, and so are my colleagues.
Archie.
Thanks. Archie Hall from The Economist. On that sort of stabilization of the labor market question, how much do you see the weakening we saw over the past 6 months, year, as a kind of data mirage around immigration and the government shutdown and so on that's now resolved? Or how much have we seen a kind of real underlying firming up in the state of the labor market, do you think?
Well, part of it is, to your point, part of it just is that labor supply, growth in labor supply has come to essentially a halt from a fairly fast clip of growth over the last couple of years, driven by immigration, and then the halt being driven by a very sudden stop in immigration. So many outcomes were possible with that. Supply came way down. It turns out that demand for labor also came down a very similar amount, maybe just a little bit more, which is why the unemployment rate has gone up. So I don't know whether that's a coincidence or not, but that's what's happened with that part. But if you look at other things, like, for example, just to pick a couple, the Conference Board's measure of job availability that came out, I don't know, was it yesterday or today? But, it shows, it's a survey showing that workers feel like job availability it's a very low reading. It's just one reading, but it's an indication of softening. People, part-time for economic reasons, which is a category within the broader U6 category measure, has moved up significantly. So there are lots of, and I could go on and on, there are lots of little places that suggest that the labor market has softened. But you're right, part of payroll job softening is that both the supply and demand for labor has come down. Growth in those two have come down. So that makes it a difficult time to read the labor market. So imagine they both came down a lot to the point where there is no job growth. Is that full employment? In a sense, it is. If demand and supply are in balance, that you could say that's full employment. At the same time, do we really feel like that's a maximum employment economy? It's very challenging and quite unusual situation.
Thanks. And one more on growth and the kind of strong growth outlook, your strengthening growth outlook you're now seeing. How much of that is the fiscal stimulus we're seeing from the beautiful bill, the tax cuts, and all of that?
So you're seeing it already. You don't have much of the fiscal. I think the outlook, you're right. It's financial conditions and it's fiscal policy for 26. But you've got strong consumption that's been happening before financial conditions have been supportive, but before the fiscal effects really are shown. So essentially the economy has once again surprised us with its strength, not for the first time. Consumer spending, although it's uneven across income categories, but consumer spending overall numbers are good, and we're benefiting from the AI build out of data centers. That's another thing we're benefiting from. But the economy overall, the growth is on a solid footing. It looks like, and it's not just those things. It's just the consumer is filling out surveys that sound really negative and then spending. So there's been a disconnect for some time between downbeat surveys and reasonably good spending data.
Thanks, Chair Powell. Christine Romans from NBC News. You talked about how consumer spending is uneven. The president calls inflation defeated and solved. The FOMC says it's a somewhat elevated inflation. But you talked about those customer survey or those consumer sentiment surveys and public opinion polls that show that most families say the cost of living is still issue number one. What is the conversation around the table with your colleagues about how wealthier consumers seem to be driving so much of the economy and why so many families still feel like they just can't make ends meet after 5 years of rising prices? What is that discussion like?
So a couple things. One, there's something to it in that we know that higher income households that tend to own real estate and tend to own stocks, securities, and those assets have been going up in value, and increases in wealth do support spending over time. So, and that's clearly a part of the story. We also know that for some time now, for a year or more, we've been hearing from retailers, for example, that serve lower income customers, whether it be food or the big box stores or anything, they're saying the same thing, which is our consumers are looking to economize. They're trading down from brands, and they're buying less, and it's changing their buying habits and that kind of thing. So we're seeing that, and that is a reality of what we're seeing. They're still consuming, but they're feeling it in a different way. I would say more broadly on affordability, we have a vast network through the reserve banks and also through the Board of Governors where we talk to small and large businesses and households, and so we do hear a lot about affordability, and we take that very seriously, and we take it to heart because one of our jobs is price stability, and so the best thing we can do for people who are feeling that squeeze is to keep inflation under control, and frankly, to finish the job of getting inflation.
He said, "Squeeze, buy, buy now."
Build-out as being positive for economic growth this year. I wonder, as you look at the weakest year last year for job creation of a non-recession year since like 2003, are you concerned about AI maybe supplanting more entry-level work and entry-level jobs, and how does that play into what you're watching about the labor market?
So everyone, of course, is watching AI and the deployment and, trying to understand exactly what's happening. And there's a wide range of possibilities. It's hard to say. And of course, anyone who uses it is amazed at what it can accomplish, right? So every technological wave will eliminate some jobs and create other jobs. And it's always been the case. If you look back, wave after wave after wave, there will be some disruption, but ultimately technology increases productivity, which is the basis for rising wages. And it may not all happen immediately, but over time, it's what enables incomes to rise over time is rising productivity. So and we always ask, well, this is going to be different. Is it going to be different? And we don't know. And we may, in any case, see in the short term jobs that are being eliminated by the capabilities of AI. We may see that. We just don't know what the overall effect is going to be. So how to think about it in macroeconomic terms, it's very hard. We can look at the aggregate data. We can analyze, for example, there is some connection, it appears, between the low hiring rate for recent college grads and AI, but it's not the main or only driver. You hear large companies, though, many of them saying that they either won't be hiring for some time, or that they're hiring less, or that they're laying people off, and they tend to refer to AI when they do that. So we're all watching and learning, and it could certainly have pretty significant effects on the economy, the workforce, and our society. We don't really have the tools to address the concerns that may arise, but we have a lot of people who focus on analyzing it and try to understand what the macroeconomic implications are, which is our job.
Becky.
Thank you, Chair Powell. Beyi from AFP News Agency. You mentioned earlier that on inflation, the broad expectation was for a one-time price increase and then for inflation to come down. And I was wondering, is your expectation still for inflation to start cooling in the second half of 2026? And if you could elaborate how far we are from target currently. Thank you.
So how far we are from target is, as I mentioned in my opening remarks, we had 3.0% core PCE inflation over the 12 months ending in December, and that's pretty much what we had the year before. So on net, no progress, but the story behind that is modestly positive in that most of the overshoot was in goods prices, which we think is related to tariffs, and ultimately we think those will not result in inflation as opposed to a one-time price increase. Okay, so that's where it is. In terms of, you asked, no one thinks they will, ex ante understand really clearly, precisely when this will happen. But there's an expectation that sometime in the middle quarters of the year, we'll see tariff inflation topping out. So what we do is when a tariff is put in place, we track the effect of those tariffs over a 6, 7, 8, 9 month period, and you can see for that tariff how long it takes to reach a place where it's affected the price level, and that's it. So we're getting better at that, and our estimate is that it'll be sometime in the middle of the year, but I wouldn't look for great precision in that. But we'll be able to see whether things are moving in that direction. I think we will be able to see.
Richard Escobedo.
Thanks, Chair Powell. I'm Richard Escobedo with CBS News. I want to look outside the U.S. about what's happening outside our shores and how it impacts the U.S. Canada's Prime Minister said last week that there's been a rupture in the global order, and I wonder how you're thinking about geopolitical risk as it relates to the U.S. economy.
So I can't comment on that speech or statement or anything like that. Geopolitical risk for us is, a lot of it is around energy, oil. And so far we haven't, for all the turmoil, oil prices have come down, as you know, and so we don't really see much. Longer than that, it's trade, and the trade, our economy has pulled through pretty well, you'd have to say, given the very significant changes in trade policy. The U.S. economy has pushed right through. Partly that is that the way that what was implemented was significantly less than what was announced at the beginning. In addition, other countries didn't retaliate, and in addition, a good part of it hasn't been passed through to consumers yet. It's being taken by companies that stand between the consumer and the exporter. So that's where that is.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. With third quarter GDP growing at 4.4% and the fourth quarter expected to have a 5 handle on it as to what the Atlanta Fed is predicting, at a time when you had a government shutdown and we thought that was going to shave off some growth, you've also got the fiscal tailwinds you've talked about, big tax refunds coming, potential tariff dividend. How could you cut rates and not spur inflation in that environment?
Well, we didn't cut rates today, but it depends on how fast potential output is growing, right? I'm just asking in principle. I'm not saying this is what's happening, but there's growth and there's how fast the potential is growing, and at a time of high productivity growth, potential output is rising. So it really matters whether potential output is growing as fast as actual output, and it would matter over time. The numbers you cite were for quarters, and quarterly GDP is, you need to look at 12 months because quarterly GDP can be very lumpy. GDP was negative in the first quarter last year. So the overall, over the year, the numbers were nothing like that. It was more in the mid-2s for the year.
And how do you explain the divide right now between strong economic growth and the job market? Is it productivity that's filling the gap? And is productivity being driven by AI at this point?
So you're right, there has been a divide of solid growth, but what looked like a weakening labor market. And that can be explained by rising productivity. But I would say we do see signs of certainly of the unemployment rate stabilizing. So it may be we're seeing the beginning of the resolution of those two things. Also, as you probably know, the lore is that when GDP and the labor market get into an argument, in the end, labor market data is more reliable. GDP data is just very hard to collect and understand, but nonetheless, I think we may be seeing that tension resolving a little bit. Too soon to say with any confidence, though.
Yeah, some of those reporters are sexy as fuck, bro.
Matt Egan with CNN.
But nah, you haven't missed
after
anything,
today,
really?
You have 2 meetings left as Fed chair. You've obviously experienced a lot during your time as Fed chair, served under multiple presidents. I'm wondering what advice you have for whoever your successor might be.
Honestly, I'd say a couple of things. One is stay out of elected politics. Don't get pulled into elected politics. Don't do it. And that's another thing. Well, another is that, our window into democratic accountability is Congress. And it's not a passive burden for us to go to Congress and talk to people. It's an affirmative, regular obligation. If you want democratic legitimacy, you earn it by your interactions with our elected overseers. And so it's something you need to work hard at, and I have worked hard at it. So, and the last thing is, it's easy to criticize government institutions so many ways. I will tell whoever it is, you're about to meet the most qualified group of people you not only have ever worked with, you will ever work with. And when you meet Fed staff, and not everybody's perfect, but there isn't a better cadre of professionals more dedicated to the public well-being than work at the Fed.
Thanks for that answer. If I may follow up, as I'm sure you've noticed, gold and silver prices have experienced historic gains of late. And I'm wondering how much attention, if any, you pay to those moves and what message you may take from these significant price increases we've seen for precious metals.
Don't take much message macroeconomically. The argument can be made that we're losing credibility or something. It's simply not the case. If you look at where inflation expectations are, our credibility is right where it needs to be. So we look at those things. We don't get spun up over particular asset price changes, although we do monitor them, of course.
Nicole, for the last question.
Hi, Nicole Goodkind-Barron's. Some prominent critics have charged that the Fed's economic models are somewhat backward-looking, but should be more forward-looking, incorporating things like productivity increases from AI. How do you incorporate current and future developments into your analysis and decision-making, and do you have an answer to those critics?
Yeah, so by and large, those criticisms, as somebody on the inside, they just don't make sense, and I'll tell you why. Every FOMC participant writes down a forecast every quarter, right? The summary of economic projections, and that's the basis for how we think about the economy. So, and the other thing is, what an economic model can do is it can grind up all the data for the last number of years, 50 years, let's say, and it can identify what are the relationships between variables A, B, C, D, and all that kind of thing. And it can tell you if you change one of those variables, this is what should happen in the macroeconomy. That's just the way it works. However, the structure of the macroeconomy is constantly changing. For example, we hadn't had a pandemic in 100 years. It wasn't in the model, and we knew it from the very beginning. It was not in the model. A trade war of this scope, we'd never had that in 100 years. And so there's great uncertainty at different points. Another thing I'll say is, when it comes to, technological developments that raise potential output, some kind of technological revolution, like happened in the 90s here, and like maybe happening now with AI, we're all over that. And everyone studies those periods, and we're very clear-eyed about the possibility that this higher productivity may persist, and also that it may not.
More boxes, more options.
In ads, bro.
Box types in stock. And
5 or 6 years we've had productivity higher. We've been talking about it that whole time. So it's very much on our minds, and we are well aware that higher productivity means higher potential output, and it changes the way you think about potentially inflation, growth, labor market, and all those things. That's all in our models. I mean, if it's just a question of using better models, bring them on. Where are they? We'll take them. But I think, we certainly are in contact with anybody who does economic modeling, and we're always looking to do better at that. But that's how I think about that.
And just a quick follow-up. We've been talking a lot about tariffs and passing through, and we've been talking a lot about them for the past few months. The trade landscape is still in a constant state of flux. Announcements, threats, negotiations, they're all frequently changing. So I'm wondering how you actually track these, what data or channels are most critical to follow this in real time?
Trade?
Yeah, the impact of tariffs and how they're changing.
Yeah, I think our staff has done a really nice job on that, and they've kind of put it together in real time. So as I mentioned, a tariff gets put in place, you can pretty much track its effects on pricing and on everything, and so you build a model up from all of the tariffs. At the beginning, it was very much of a forecast. Now it's every cycle that goes by, it becomes more informed by actual data, and our forecasts were not far off. What changed was, as I think I said earlier, what was implemented was smaller than what was announced. In addition, we didn't see retaliation internationally, and I think people did generally expect that because we saw that in the past, and that really mattered too. And then the other thing is that pass-through didn't know how fast that was going to be to consumers, didn't know how much exporters would take, how much companies in the middle would take, and how much the consumer would take. And it turns out it's a lot of companies in the middle who, by the way, are pretty strongly committed to passing the rest of it through, which is one of the reasons why we need to keep our eye on inflation and not declare victory prematurely.
Thank you.
We're done?
We're done.
Okay. Thank you very much.
Thank you, Jerome. Thank you. Appreciate it. Appreciate it, Jerome. Thanks for your time. Double Yahoo. Doubling up the Yahoo. For now. Till the Tesla earnings come out, I guess. The market kind of react like I'm sure it's happened, but I don't remember the last time during a Fed interest rate decision the market didn't move decently in either which direction. It's kind of just like ranging. It's very odd. Very odd. But you are at all-time highs. There's going to be a lot of people, taking profits, maybe even shorting the all-time highs. Especially after you've sold off 0.5% today on the index. It's going to be a lot of undecided traders here. But overall, pretty interesting. I think there's just a lot of bearish people right now. GameStop's doing the same thing. It's just ranging. It's very odd. Very odd. Something's about to happen. Maybe some news after hours or something. Not on GameStop, just the market as a whole. And something's gonna pop. Something's gonna happen. You just don't see markets range like that very often. Yeah, we're going to watch the earnings call here. Waiting on tech earnings. Oh, yeah. Duh. Duh. Good point. Good point. Wasn't even thinking about that. That's exactly what the market's waiting on. You're exactly right. Where's the earnings call gonna be? Investor relations. Tesla. Tesla. LaCroix. LaCroix. Tesla. Oh, they got a weird Q&A. Kind of a cool Q&A. I kind of like this. The shareholders vote the questions asked. That's actually really cool. Top voted. That's a cool way to ask questions. Not seeing anything for the earnings call though. Kind of whack. I should have recorded that. That probably would have been a good thing to record and post as a stream clip. The Jerome Powell thing. I was thinking about that, like, as he was talking, I'm like, damn, I should have been recording this. I don't think it's a video that would get a lot of views, but could be worth it. Could have been worth it. It's too late now, but that's okay. That's okay. It's only it's not even 1:30 yet. Bank of Canada, or the Federal Reserve in Canada, also left their rates flat. And some mortgage data. Rates went up a little bit. Everyone out to lunch. Yeah, it's a slow stream today, man. Very slow stream today. Very odd. It just really makes me think in those moments when GameStop's up quite a bit. It's a lot of bots. Because whenever it goes back to normal, you know, it's just the normal people who are here all the time. So it really makes me think my channel gets botted in those moments. But I don't know, man. I don't know, man. Bitcoin's still not moving. I mean, it would make sense why people would bot the stream for, you know, when the stock's up. It would make more sense. Because, you know, your average person, if they're trying to look up a live stream or a GME video or something, and it looks like it has a lot of viewers or a lot of views, and the stock's up, you know, maybe they would be more inclined to buy. And most people aren't going to buy and be a long-term holder. Most people are going to buy and then the stock's going to drop like it did today, and then they're going to sell out because a 3% drop for your average person is massive. You know, that's I think that's like, I don't know how much that is. Isn't it like 30? Yeah, it's like $30 every $1,000 you bet, right? Yeah, so to a lot of people that's massive, you know. And most people are betting more than $1,000. Most people are probably betting more in the range of like 5 to 10. So you're down $100, $200 in one day. You're going to sell out because you're not confident in the investment. So it would make sense. It would make sense. Maybe if GME's in the title. Well, GME is in the title. GME's always in the title. Not for this gang. I know. We've seen down 30% days. We've seen some massive down days. 3%'s nothing. 3%'s like a chill day. for some of us here. This is a chill day. Average day. %'s what I wake up expecting. Facts. Facts. That's some facts right there. Every day when I wake up, I'm like, how much is the stock down? I never even think about, like, even when it was going up a lot, I never like woke up and like, yeah, I bet the stock's up today. It's always like, I wonder how much it's down. That's literally what I think every time. That shit's funny. Aaron! What's up, Aaron? How you doing, bro? Aaron. What is a Trump account? Does anyone know what that actually is? What is the Trump account? I'm gonna ask AI. Tax advantage individual retire. A Trump account is a new type of tax advantage individual retirement account designed specifically for children under the age of 18. It is created under the Big Beautiful Bill. These accounts are intended to provide children with a financial head start by allowing parents to save for their future. Oh, so it's nothing. It's literally nothing, but it is tax advantaged, so that's cool. I saw they would match like $1,000 though. I thought that was kind of interesting. Anyone who has a child should be looking into that potentially, especially if they match. I don't know if they just give you $1,000 or they match it. I'm not exactly sure, but definitely worth looking into, probably. Nothing there. Then it goes up 1% and the chat explodes. Not always. I feel like there was the day it was up like 8% a few trading days ago. Or wasn't that Monday? I think that was on Monday. And there's a lot of people in here, but usually nobody cares unless the stock's up a lot. And there's been times the stock's been up like 10% and nobody's here. I don't know. I don't know. I think it's just streaming, you know, not everyone has the time to watch the stream every day. Everyone's on different time zones, you know. And it's the stock market. Some people will stick around and enjoy the investment for what it is, but most people are going to sell when they have profit. That's just kind of the realities of the stock market. Most people aren't going to be committed to an investment. They're just on to the next trade. On to the next stock that's up 10% in one day. Man. The bots are random. Yeah, they are. Very random. Silver's been a roller coaster. Oh, I'm sure. I'm sure. Silver's pretty interesting right now. I wouldn't buy it. You could maybe trade it, but I don't know. I haven't even paid attention to what the profile on that looks like. I'm sure there's a lot of trading opportunities on silver since it's been visiting new prices. But I just don't care to trade personally. Burry says he's holding. We'll see. Burry says that until the stock price actually goes up. We'll see. Everyone's waiting on these earnings. No 10? There's that picture that is potentially Roaring Kitty. But other than that, not really. What picture? It's on Twitter. Surprised you haven't seen it. If I can find it in a relatively short amount of time. I don't really want to go and try to find this. I don't see it. I don't know where it went. I can't find it. I can't find it. Where the hell is it, bro? I don't know where it is. This one. With his crusty ass hands. With his crusty ass hands. Yeah, supposedly the wedding ring is him. And who else is gonna wear $30,000 shoes? I wouldn't even, there's not many people out there that are just gonna wear $30,000 shoes for the fun of it. And Hugh G pointed out something interesting. This watch on this hand looks like he doesn't have a band. It just looks like it was placed there or photoshopped in. So, yeah. I don't know. And the stature definitely looks similar. Somewhat. So I don't know. But, you know how I feel about tinfoil. I don't put much weight on it. It's kind of interesting, though. Definitely shat his pants. Maybe they ate too much Nobu. Maybe they ate too much Nobu. Yeah, $30,000 shoes in a public restroom. Like, not many people are gonna be doing that. Even people who are rich, a lot of the richies you see on the internet probably aren't actually rich, but they're definitely not rich enough to be wearing $30K shoes in public. I feel like Roaring Kitty's that guy, you know? He's that guy. He would wear 30K shoes in public just for fun. They were probably AI too, like the watch, cut and paste. Yeah, it could be a fake picture for sure. Could be AI. That's why I don't put much weight on that stuff. Kevin Legend might not even be Roaring Kitty's brother, so it's interesting, but I would never put any weight on it. Until the price action says otherwise. It's pretty irrelevant for now. I'm gonna get it the earnings call. I gotta try to find the earnings call for Tesla. Tesla earnings. I don't have it up for some reason. Oh, hopefully I don't have to sign in. That'd be annoying. That's our shareholder meeting. Yeah, I don't know. I'll find it when it gets closer. I'll find it when it gets closer. Tesla tin? Nah, no Tesla tin. It'll just be interesting to see this earnings. A lot of people are so bearish right now, so like it would be pretty funny if all these companies did extremely well. And like stocks like Microsoft and Meta are down quite a bit. So it would actually be very impressive to see these stocks sell off into earnings or after earnings. I'd be pretty surprised, but you know, flip the coin. Flip the coin. That's what's about to happen. I'm sure one of them will go up, one of them will go down. That's usually what happens, but if they all do well and they all go up, that's going to be pretty funny because there's just a lot of bearish people right now, so if all those stocks go up on earnings and the market pushes new highs again, anyone who's shorting is fucked. Gold's at 5,300. Holy shit. Jesus, 5,300? That's insane, dude. That's actually insane. Any whales? Nothing notable. There was a 1.6 million put position put on, like 1.6 million puts. But other than that, nothing really notable. Just some small purchases. Better run out and buy an ounce of gold. Nah, I'm good. I'm good. I'm okay on that. It's just impressive, bro. It's impressive waking up every day and seeing gold at another high. Like, it's actually crazy. Pick up all the electronic waste. That could be why it's up so much. Could be. It's a commodity play for AI, I guess. You could say that, but all metals are going up, so I don't know if that's real. I think people just want physical things. You know, Bitcoin's not going up, so nobody wants that. I think people just want physical investments. Even though, you know, you can buy paper gold, whatever. It just really seems like people are moving towards physical investments, potentially. I don't know. Boomers getting the precious metals? Nah. Boomers are getting rich if they're already holding precious metals, but are they the ones buying? Probably not. They know MOAS is coming, so they're raising the cost of gold chains. That's funny. That was funny. Oh, that's hilarious. Maybe. I ain't getting a gold chain, but can't even get a silver chain anymore. Silver chain's gonna be more expensive than a gold chain soon. Not really, but can't even get a silver chain anymore, bro. It's crazy. I actually have a bunch of silver coins, I think. Like some super rare ones. I'll have to check that out. I don't know if they're silver or not. I sold all my like terrible silver coins, so that's sad, but I think I have some like I don't know. I gotta have to look. One of them are gold. That'll be crazy. I should probably look into that, huh? I also have this plaque that's like a giant coin. And I don't know if it's like silver or anything. It might just be like some I don't know, but if that thing's silver, holy shit. I want to look that up actually. I forget what it's called. But I'm going to try to look. Crazy. I forget what it's out of. I'm gonna look. One sec. I'm gonna go look real quick. Like, could you imagine if I just had some massive silver coin that's worth like 10 grand? You know how sick that would be? I don't think it's silver though. I'm not seeing it. I have some of these coin sets though, I think. Damn, I'm gonna have to look into that. Could be a good time to sell them. Potentially. I don't even see anyone selling the thing I have. Yeah, nobody has it. Oh, it's right there. Bro, is that really silver? Dude. Some people are selling the thing I have for like 1,800 bucks, but I don't think anyone's ever sold it. 'Cause I don't know if it's real silver or not. There's a bronze one too. Yeah, it's never sold on eBay. What's it called again? If that's silver, that's crazy. I don't have the authenticity. I don't think. Maybe I have the letter of authenticity somewhere. Hopefully I do. I don't think I do. That's a bad thing. I'll have to wait. I'll have to wait. I'll have to wait. Cordell discovers he's secretly holding onto an alien artifact that he thinks is silver. No, it's some. I found the item. It is silver. It is silver. I just don't think I have the letter of authenticity. I'll have to go see. Hopefully. That's a valuable thing. That's a valuable thing, but I don't know if I have it for that. But if it's actually like legit silver, silver and gold go crazy. Yeah, they went up a lot. What's up? Drunk to the east or whatever it was. Whatever that name was. I forgot already. Drunk to the east. Leaning drunk to the east or something. What's up, bro? Drunkly leaning on the east wind. My guy. It's either worthless or invaluable. It'll just be like a market timing thing. It might not be selling right now, but I know when it'll be selling. It's just, I can't give the exact date. I don't know exactly when it's going to happen, but there's going to be a time and place because it's a fucking sports thing. So when that player dies or something happens, those items will become in demand and they'll be worth way more than they are now, actually. So it's all about timing with some things. It might not be selling right now, but it will sell eventually. You just gotta sell it at the right time, and it's not the right time yet. But still, if that's a real silver thing, and it's not just like silver coated, that's a lot of silver. And I think I'll have to look at my other coins. I don't know if they're silver or gold or what they are. They might just be plated, so they might not be worth that much, but it'll be still like the same thing. It's got to be all about the timing. Even though everyone's obsessed with silver and gold, certain items, certain items aren't worth selling at this moment. Just buy silverware for major arbitrage opportunities. Silverware is stainless still. Silverware is stainless steel, bro. Unless you're getting real legitimate silver, that stuff's hard to get. I know someone that has a bunch of silverware that's like real silver. But majority of silverware is just stainless steel. It's not actually silver. Yeah, or plated. Plated's whack. Plated's whack. Although, you know, it could be more valuable than it was a few months ago. You don't want plated stuff. You want the legit. You want the real shit, you know? You want that good. He was thinking now is the 18th century. No, it was, I used to work at this eBay store, and they would buy, like, pallets of random stuff, and he happened to get a bunch of silver, like, legit silverware in one of the pallets, and he showed me it. He had a box full of it, like a ton of stuff. So, you know, one of the benefits of buying and selling junk. You never know when that junk's gonna become extremely valuable. It's kind of like GameStop, you know? You never know when this junk stock is gonna become extremely valuable. You never know. The English Britain's family hand-owns. Oi, mate, you got me some silverware? You got me some fine wares? Now that the silver price is up, I need me my wares. That dude had a lot of, like, gold and silver, too. I bet that guy's banking right now. I bet that guy's banking. $10 minutes to market close. Well, 8 minutes to market close. I'll be curious to see if we get any or a lot of viewers in here for the Tesla. I just feel like there's too many streams for these long for these more popular big name stocks. There's just too many people streaming it. $8 minutes to long Microsoft. Nah. I'm good. Long GameStop? Okay. But long Microsoft? Nah, I'm good. I'm good. I do think Microsoft's one of the greatest companies in the world, but I would never buy it. $7 minutes to short Tesla. I never short Tesla either. I wouldn't buy or short any of those stocks. Unless it was for a trade, I guess, but this is not my trading era. Trading era might be in a few years again, maybe. We'll see. Probably not, but we'll see. I don't really plan on having another trading era. I've done enough trading in my lifetime. I've done enough to know that it's probably not worth my time. Tesla. Bottle water. Tesla. LaCroix. Tesla. MacBook. Tesla. Bottle water. Oh, man. Oh, man. LaCroix. What was the volume like today? Nothing? 6 million? Nothing. Compared to the last couple days, not much volume. Tesla. Tesla. LaCroix. I can't get over it. That shit's too funny. If you guys have never seen that South Park episode, it's pretty funny. Pretty funny. Welcome to South Park Realty. Craig's house. Today we're going to be looking at Craig's house. Damn, Seagate's up a lot, huh? Holy shit. It's up 20%. I didn't even realize how much that was up. That's crazy. That is up a lot. I saw some fake trader on Twitter buying this. ZSL. It's like the inverse of silver. Literally 4 months ago, it was like $25 or something. So if you think silver is gonna turn around, go back below 100, you know, this could be an interesting bet for silver, but I don't know. That's a risky, kind of risky. I'm not a big fan of the ultra short ETF things, pro shares. Not a big fan of those. Iron Condor on big tech earnings is sustainable. I don't know why people don't just do that. I mean, I wouldn't want to do an Iron Condor, but I'm not looking to make pennies on the stock market. Personally. But I've hit some iron condors in my day. I don't find trading interesting. It's not. I find YOLOing every dollar you have into one stock and seeing if it's going to work out interesting. And not paying taxes if you make hundreds of thousands of dollars because you don't have to sell. That's interesting. But making like a couple $100 on a trade or whatever, and then losing $100 on a trade, and then making $100 and then losing $100, that's not interesting to me. That's not interesting to me. %20 upside for Microsoft. Isn't Microsoft already up a fuck ton the last like week? Sounds sketch. I mean, selling options is like, or doing spreads is, you know, higher probability to win. You're just not making that much. Not risking that much, but also not making that much. So, I don't know. I just don't. I'm just not that guy. And in a lot of cases, some of those spreads, you're risking like $200 to make like $30. Like, in a lot of cases, a lot of those spreads are not great to, you know, they're good probability, they're consistent. You have probably the highest probability in the market as far as trade goes, but there's just no gain. There's just no gain. Oh, you want a bell? Oh, the market just closed. I'm late. Let's get a new bell. Let's get a cowbell this time. Let's get a cowbell. Oh yeah. Oh yeah. The cowbell.
You have a UTI. After us.
Alright, I can't play that. I'm gonna get clapped. I'm gonna get clapped playing that music. It's just gambling. Yeah. Essentially, that's all trading is gambling. No matter how you're doing it, whether you're selling options, buying them, shorting the stock, buying the stock. Even, you could even say what I'm doing is gambling, investing 5, 10, 20 years into the future. It's gambling. The Cybertruck. Cybertruck! A Cybertruck! Yeah, let's see what Tesla brings to the table here. I'm gonna share the stream. I forgot to share the stream last time too. That was probably a big issue. If you guys can share the stream. Tesla stock earnings call live. Tesla, hashtag Tesla, hashtag Tesla. Do the hashtag Tesla. My tweet's gonna get buried by all the bots. The freaking bots. Whoa. Right as I posted that, like 50 people came in the stream. That's crazy. Hope you're all doing good. Hope you're all doing good. Hope you're excited for Tesla earnings. I hope you're excited for Tesla earnings. Whoops. That is one thing good about Twitter. You can share your stream and people will click on it for a second. Some people will stick around, some won't. But it is a nice feature of Twitter. It's probably one of the only things it's good for. I wonder how long this is gonna take. Microsoft's taking a hit. Good call out, good call out. Damn, down 7%. That's pretty big. That's pretty big, but Microsoft's also ran up a lot. The past, past week, basically. Microsoft, you're basically just back to the beginning of last week, pretty much. Microsoft did run up a lot. I got smashed. Hey, that's welcome to earnings. Welcome to earnings season. Earnings season. Let's see, what did the earnings look like for Microsoft? I see a lot of people crying here. A lot of tears. A lot of tears. Damn. Maybe we should have streamed Microsoft. There's a lot of people talking about Microsoft. Maybe that was the better stream. I just thought there would be more Tesla investors than anything else, but I guess Microsoft is the one. I am the one, the one, the one. Yeah, good call out on the Microsoft. I'll try to find Microsoft Investor Relations. Microsoft Cloud and AI strength drives second quarter results. Let's see. Revenue was $81.3 billion, increased 17%. Operating income was $38.3 billion, increased 21%. Net income on GAAP basis was $38.5 billion, an increase 60%, and non-GAAP basis was $30.9 billion, increased 23%. Diluted earnings per share on GAAP basis was $5.16, increased 60%, and on non-GAAP basis was $4.14, increased 24%. We're only beginning phases of AI diffusion. Already, Microsoft has built an AI business that is larger than some of our biggest franchises. We're pushing the frontier across our entire AI stack to drive new value for our customers and partners. Microsoft Cloud revenue crossed $50 billion this quarter, reflecting strong demand for our portfolio of services. I mean, seems like they did okay. I think, you already had a massive run up into the earnings, so not really. The Tesla's up though. Is Tesla out? Yeah, Tesla's out. Tesla's out. Let's see. Tesla fourth quarter 2025 production deliveries and deployment. In the fourth quarter, we produced over 434,000 vehicles, delivered over 418,000 vehicles, and deployed 14.2 gigawatt of energy storage products, a record for deployments. Thank you to all our customers, employees, suppliers, shareholders. Let's see. Wait, they didn't post? Yeah, I swear they posted. Where's the Tesla earnings? They had to have posted. SEC filings. Meta's up. It's just Microsoft sold off. Microsoft already bounced back quite a bit. Yeah, Meta's up too. How come I can't find Teslas? Doesn't really make sense. I guess I'll just look up at Metas for now. I'll look up Metas, I guess, for a second. That's Meta's earnings call. Let's see. Fourth quarter highlights for Meta. Daily active people was 3.58 billion on average for December, increase of 7%. Ad impressions increased by 18 to 12% year over year. Average price per ad increased 6% and 9%. Revenue was 59.89 billion and 200 billion for the year, representing a 24 and 22% increase. Cost and expenses. Oh, they're doing quarter and annual. And so quarter is 35.15 billion. Annual is 117.69 billion, increase of 40% and 24%. Capital expenditures were 22.14 billion for the quarter, 72.22 billion for the year. Capital return program, share repurchases of common stock were nil for the quarter, and 26.26 billion for the year. Dividend payments were 1.34 billion and 5.32 billion. Cash was 81.59 billion. Cash flow was 36.21 billion for the quarter, 115.8 billion for the year. Free cash flow was 14 billion for the quarter, 43.59 billion for the year. Long-term debt was 58.74 billion. Headcount was 78,865, an increase of 6%. I assume headcount's their employees, maybe? But everyone's here for Tesla, I imagine. So I gotta try to find the Tesla one. I don't think this is doing anything. Oops. Not at. Yeah, Meta and Tesla are crushing. It's just Microsoft. But Microsoft bounced back quite a bit. Microsoft was down a lot. Microsoft tends to do that. Whenever Microsoft sells off on earnings, it does tend to bounce massive. My iron condors on Microsoft got railed. That's what happens when you gamble, my friend. Sorry to say. Sorry to say. That's what happens when you gamble. Maybe you download this. The shareholder deck. Oh, it's this. Okay. This is their earnings report. This is a weird earnings report. Damn, a lot of detail. Good lord. Tesla puts in a lot of detail for their earnings report. That's very impressive. See, their profitability, 4.4 billion GAAP operating income 2025, 1.4 billion in Q4, 3.8 billion GAAP net income, 0.8 billion in Q4, 5.9 billion non-GAAP net income, 1.8 billion for the quarter, cash flow of 14.7 billion, 3.8 billion in the quarter, free cash flow of 6.2 billion, 1.4 billion in the quarter, 7.5 billion increase in our cash and investments in 2025 to 44.1 billion. Operations began removing safety monitor from our robo-taxis in Austin in January. Record Q4 and fiscal year 25 energy storage deployments. Record vehicle deliveries in APAC. So, seems like Tesla crushed. I feel like they all crushed. It's just Microsoft had that massive run up into the earnings. I think that's the only reason that sold off. It seemed like all these things crushed on earnings. Not really seeing, I don't track these stocks. I don't keep track of, how they're doing or anything like that. I usually check them once or, a couple times a year, usually during the earnings. But it seems like all of these did well. So that's cool. That's cool. The earnings call doesn't start for a while, though, which kind of sucks. Kabuto King just received a private offer for my entire collection. I cannot be bought. Wow, that first tweet I tweeted got a lot of views. That's crazy. It's all about timing. Whoops. It's all about timing with Twitter, it seems like. There's a small window where a bunch of people are obsessed with the stock, and then it's over. Goes quick. Let's see. There's some things I want to read. I want to read about their robotics. Let's see what this says. We made further progress on Optimus program in 2025. In Q1 of this year, we plan to unveil the Gen 3 version of Optimus, which will include major upgrades from version 2.5, including our latest hand design. The Gen 3 is our first design meant for mass production. Preparations are underway for the first production line, including supply chain readiness, with start of production planned before the end of 2026, an eventual planned capacity of 1 million robots per year. Good to know, good to know. That's like, probably the only thing I'm interested in on Tesla is the robots, because that's like a new industry, and it seems like it could potentially actually be useful. Like AI, I'm just not that excited about AI, but robotics seems interesting, even though AI and robotics go hand in hand, I guess. AI training compute. We're currently building Cortex 2, at Gigafactory Texas to further increase our AI training compute capacity. In the first half of 2026, we plan to more than double the size of on-site compute in Texas. We aim to maximize capital efficiency by scaling training compute judiciously, including when the training backlog gets too long or in anticipation of greater demand from our engineers to support our AI-related offerings. Continue to enhance FSD. We began testing driverless robotaxis in Austin in December, began removing the safety monitor from customer rides in January on a limited basis, which will unlock further expansion of our robotaxi fleet and coverage of areas in the Austin metro. Our Bay Area ride-hailing service began serving the San Jose airport in October, with plans to expand to other major airports in the Bay Area upon receiving required permitting. Launched FSD in South Korea. Customers drove over 1 million kilometers using the software in 1 month. Wow. Monthly subscriptions to FSD continued to grow sequentially and more than doubled in 2025. Starting this quarter, we transitioned access to FSD to monthly subs only as we began to sunset an upfront payment option. That's like the only reason I would get a Tesla, but now that it's a monthly subscription, I don't think I would ever get a Tesla. See, on January 16th, 2026, Tesla entered into an agreement to invest approximately $2 billion to acquire shares of Series E preferred stock of XAI. As part of their recent publicly disclosed financing round, Tesla's investment was made on market terms consistent with those previously agreed to by other investors in the financing round, as set forth in Master Plan Part 6. I think that's 6. Tesla, that might be 4. Tesla is building products and services that bring AI into the physical world. Meanwhile, XAI is developing leading digital AI products and services, such as its large language model, Grok. In that context, and as part of Tesla's broader strategy under Master Plan, Tesla and XAI also entered into a framework agreement in connection with the investment. Among other things, the framework agreement builds upon the existing relationship between Tesla and XAI by providing a framework for evaluating potential AI collaborations between the companies. Together, the investment and the related framework agreement are intended to enhance Tesla's ability to develop and deploy AI products and services into the physical world at scale. This investment is subject to customary regulatory conditions, with the exception of close in Q1 26. IBM's ripping. There was a lot of earnings today, so I'm sure there's a lot of things to look at. Oh wow, yeah, IBM is crushing, bro. IBM is crushing. All those stocks, bro. Even though Microsoft's down, Microsoft still crushed on their earnings, and that stock has been ripping. So like, it seems like everything crushed. Wasn't a ServiceNow? ServiceNow was one of those stocks. ServiceNow's down. But ServiceNow kind of had a rally into the earnings. Sold off a little bit yesterday and today, but you had a pretty decent sized rally going in the earnings on ServiceNow. What other earnings were there? There was a lot today. Waste Management. I imagine Waste Management did well. Waste Management has not moved. Las Vegas Sands. LVS. Wow, that's down quite a bit. 8%. That's pretty large. What else did you have? I mean, you had a lot of companies. Southwest Airlines. I'm just looking at the ones I actually know. Wow, Southwest Airlines is up 4%. That might be all-time highs for that stock. I don't know. It's new highs on the year, though. Levi. I imagine Levi did well. No, down 2%. Oh, Levi was down already on the day. Levi's been flat for a long time. I'm sure Levi will have its moment one day. Oh wait, it's actually didn't IPO until 2019. So it hasn't been on the market that long. SanDisk? I don't think SanDisk didn't report today. That was like the other day. Whirlpool. Whirlpool's down 2%. Obviously, you know, Meta, Tesla, and Microsoft are... Damn, Meta is ripping. Meta's up above 700 now. Crushing. Absolutely crushing. What is this? Photos and charts? Oh, this is kind of cool. Cold weather testing in Alaska? Interesting. Tesla semi production beginning in 2026. Mega charger network planned sites for 2026. Oh, those are for the semis. Okay. 9 millionth vehicle produced. 6 millionth drive unit produced. Wow. Key metrics. I like Tesla's earnings. This might be the best earnings report I've seen. Like, this is nice. It's nice and clean. They just give you all the info. Not really trying to hide anything, it seems like. I actually really like this. Their net income's been slowly going down since 2023. But everything else, operating cash flow, free cash flow, relatively stable. Vehicles delivered, relatively stable. It's just their net income going down. By quite a bit, actually. The adjusted EBITDA, not as much, but overall net income came down quite a bit since 2023. That's notable. Total quarterly revenue decreased 3% year over year to $24.9 billion. Decrease in vehicle deliveries. Lower regulatory credit revenue. Growth in energy generation and storage. Growth in services and others. Positive Forex impact. Growth in other automotive ancillary sales. Partly driven by the increase in FSD subscriptions. Higher vehicle average selling price. Profitability. Our quarterly operating income decreased 11% year over year to $1.4 billion, resulting in a 5.7% operating margin. That's it. That's interesting, huh? Let's see. Increase in SBC and restructuring and other charges. Increase in operating expenses. Driven by AI and other R&D projects and SG&A. Higher average cost per vehicle due to lower fixed cost absorption for certain models and an increase in tariffs. Decrease in vehicle deliveries. Lower regulatory credit revenue. Positives are higher vehicle average gross profit due to mix and pricing impacts. Growth in energy and storage gross profit. Growth in services and other gross profit. Growth in other automotive ancillary sales, partly driven by an increase in FSD subs. Interesting. I like Tesla's earnings. I don't really want to dive much deeper into it, but I like this. Out of any earnings report or company that's done an earnings report, Tesla might be like the best one. Like, this is a nice earnings report. Very nice. I like that. I liked that. Get any GameStop news or anything after hours? I imagine not. Don't look like it. Wouldn't expect anything less, though. When do we ever get news? After getting a bunch of good news? Doesn't really happen. It's going to be quiet for the next however long. Meta is ripping, son. Meta is absolutely ripping. Back to 9 weeks or more of nothing, basically. Which isn't necessarily a bad thing, especially if the stock continues to trade, $23, $24. That'd I'd be very positive. Oh, the East Wind followed me. What's up, East Wind? I'll follow you back, bro. I'll follow you back, East Wind. Damn, the earnings call doesn't start for another hour? Good lord. Good lord. Tesla's earnings, or Meta's earnings calls on right now. Maybe let's peep. Let's peep that. We got some time to kill. We got some time to kill. Let me get in. Let's get in here. Let's get in here. See what the Zuck's gotta say. The Zuck. Mother Zucker.
Conference call. Joining me today to discuss our results are Mark Zuckerberg, CEO, and Susan Li, CFO. Our remarks today will include forward-looking statements, which are based on assumptions as of today. Actual results may differ materially as a result of various factors, including those set forth in today's earnings press release and in our quarterly report on Form 10-Q filed with the SEC. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in today's earnings press release. The earnings press release and an accompanying investor presentation are available on our website at investor.atmeta.com. And now I'd like to turn the call over to Mark.
All right. Hey, everyone. Thanks for joining us. We ended 2025 strong with more than 3.5 billion people now using at least one of our apps every day. That includes more than 2 billion daily actives each on Facebook and WhatsApp, and just shy of that on Instagram. Our business also performed very well thanks to record-breaking holiday demand and AI-driven performance gains. We are now seeing a major AI acceleration. I expect 2026 to be a year where this wave accelerates even further on several fronts. We're starting to see agents really work. This will unlock the ability to build completely new products and transform how we work. In 25, we rebuilt the foundations of our AI program. Over the coming months, we're going to start shipping our new models and products. I expect our first models will be good, but more importantly, will show the rapid trajectory that we're on. And then I expect us to steadily push the frontier over the course of the year as we continue to release new models. I'm very excited about the products that we're building. Our vision is building personal superintelligence. We're starting to see the promise of AI that understands our personal context, including our history, our interests, our content, and our relationships. A lot of what makes agents valuable is the unique context that they can see. And we believe that Meta will be able to provide a uniquely personal experience. We're also working on merging LLMs with the recommendation systems that power Facebook, Instagram, Threads, and our ad system. Our world-class recommendation systems are already driving meaningful growth across our apps and ads business, but we think that the current systems are primitive compared to what will be possible soon. Today, our systems help people stay in touch with friends, understand the world, and find interesting and entertaining content. But soon, we'll be able to understand people's unique personal goals and tailor feeds to show each person content that helps them improve their lives in the ways that they want. This also has implications for commerce. Our ads today help businesses find just the right, very specific people who are interested in their products. New agentic shopping tools will allow people to find just the right, very specific set of products from the businesses in our catalog. We're focused on making these experiences work across both our feeds and across business messaging, significantly increasing the capabilities of WhatsApp over time. New kinds of content will soon be possible as well. People want to express themselves and experience the world in the most immersive and interactive way as possible. We started with text and then moved to photos when we got phones with cameras, and then moved to video when mobile networks got fast enough. Soon, we'll see an explosion of new media formats that are more immersive and interactive and only possible because of advances in AI.
What's up, Isaiah?
Our feeds will become more interactive overall. Today, our apps feel like algorithms that recommend content. Soon, you'll open our apps and you'll have an AI that understands you and also happens to be able to show you great content or even generate great personalized content for you. Glasses are the ultimate incarnation of this vision. They're going to be able to see what you see, hear what you hear, talk to you and help you as you go about your day, and even show you information or generate custom UI right there in your vision. Sales of our glasses more than tripled last year, and we think that they're some of the fastest growing consumer electronics in history. Billions of people wear glasses or contacts for vision correction, and I think that we're at a moment similar to when smartphones arrived, and it was clearly only a matter of time until all those flip phones became smartphones. It's hard to imagine a world in several years where most glasses that people wear aren't AI glasses. For Reality Labs, we're directing most of our investment towards glasses and wearables going forward, while focusing on making Horizon a massive success on mobile and making VR a profitable ecosystem over the coming years. I expect Reality Labs losses this year to be similar to last year, and this will likely be the peak as we start to gradually reduce our losses going forward while continuing to execute on our vision. As we plan for the future, we will continue to invest very significantly in infrastructure to train leading models and deliver personal superintelligence to billions of people and businesses around the world. I recently announced Meta Compute with the belief that being the most efficient at how we engineer, invest, and partner to build our infrastructure will become a strategic advantage. Dina Powell-McCormick also joined us as president and vice chairman, and she will lead our efforts to partner with governments, sovereigns, and strategic capital partners to expand our long-term capacity, including ensuring positive economic impact in the communities that we operate in around the world. An important part of Meta Compute will be making long-term investments in silicon and energy. We will continue working with key partners while advancing our own silicon program. We're architecting our systems that we can be flexible in the systems that we use, and we expect the cost per gigawatt to decrease significantly over time through optimizing both our technology and supply chain. The last thing that I want to mention is that I think that 2026 is going to be the year that AI starts to dramatically change the way that we work. As we navigate this, our North Star is building the best place for individuals to make a massive impact. So to do this, we're investing in AI native tooling so individuals at Meta can get more done. We're elevating individual contributors and flattening teams. We're starting to see projects that used to require big teams now be accomplished by a single very talented person. I want to make sure that as many of these very talented people as possible choose Meta as the place that they can make the greatest impact, to deliver personalized products to billions of people around the world. And if we do this, then I think that we're going to get a lot more done, and I think it's going to be a lot more fun. All right, that's everything I wanted to cover. This is going to be a big year for delivering personal superintelligence, accelerating our business, building infrastructure for the future, and shaping how our company will work going forward. As always, I am grateful for all of the hard work of our teams and to all of you for being on
Meta
this
is
journey with us.
ripping.
Now here's Susan.
Apparently we should have
Thanks, Mark, and good
streamed
afternoon,
Meta,
everyone.
not Tesla.
Let's begin with our segment results.
Meta is
All
murdering right
comparisons
now.
are on a year-over-year basis unless otherwise noted. Our community across the family of apps continues to grow, and we estimate more than 3.5 billion people used at least one of our family of apps on a daily basis in December. Q4 total family of apps revenue was $58.9 billion, up 25% year over year. Q4 family of apps ad revenue was $58.1 billion, up 24%, or 23% on a constant currency basis. In Q4, the total number of ad impressions served across our services increased 18%. Impression growth was healthy across all regions, driven primarily by engagement and user growth, and to a lesser degree, ad load optimizations. The average price per ad increased 6% year over year, benefiting from increased advertiser demand, largely driven by improved ad performance. Family of Apps other revenue was $801 million, up 54%, driven by WhatsApp paid messaging revenue growth, as well as Meta verified subscriptions. Within our Reality Labs segment, Q4 revenue was $955 million, down 12% year over year. As we noted on the last call, the year-over-year decline in Reality Labs revenue is due to us lapping the introduction of Quest 3S in Q4 of 2024, as well as retail partners procuring Quest headsets during the third quarter of 2025 to prepare for the holiday season, which was recorded as revenue in Q3. Moving now to our consolidated results. Q4 total revenue was $59.9 billion, up 24%, or 23% on a constant currency basis. Q4 total expenses were $35.1 billion, up 40% compared to last year. Year-over-year growth was driven primarily by employee compensation expenses, legal expenses, and infrastructure costs. Growth in employee compensation expenses reflects the technical hires we've added this year, particularly AI talent. Legal expense growth was due to both lapping legal accrual reversals in Q4 of 24 and charges recorded in Q4 25. Infrastructure expense growth was driven by higher depreciation,
Up
cloud
9%
spend, and
now.
other operating expenses. We ended Q4 with over 78,800 employees, up 6% year over year, driven by hiring in priority areas of monetization, infrastructure, Meta Superintelligence Labs, as well as regulation and compliance. Fourth quarter operating income was $24.7 billion, representing a 41% operating margin. Q4 interest and other income was $609 million, driven primarily by unrealized gains on our equity investments. Our tax rate for the quarter was 10%, slightly lower than our outlook of 12 to 15% due to the settlement of matters with tax authorities. Net income was $22.8 billion, or $8.88 per share. Capital expenditures, including principal payments on finance leases, were $22.1 billion, driven by investments in data centers, servers, and network infrastructure. Free cash flow was $14.1 billion. We ended the quarter with $81.6 billion in cash and marketable securities and $58.7 billion in debt. Turning now to the business performance. There are two primary factors that drive our revenue performance: our ability to deliver engaging experiences for our community and our effectiveness at monetizing that engagement over time. On the first, we're continuing to drive incremental engagement from ranking and product improvements. Instagram Reels had another strong quarter, with watch time up more than 30% year over year in the US. Engagement is benefiting from several optimizations we made to improve the quality of recommendations, including simplifying our ranking architecture to enable more efficient model scaling. This unlocked the ability for our systems to consider longer interaction histories to better identify a person's interests. On Facebook, video time continued to grow double digits year over year in the US, and we're seeing strong results from our ranking and product efforts on both feed and video surfaces. The optimizations we made in Q4 drove a 7% lift in views of organic feed and video posts on Facebook, resulting in the largest quarterly revenue impact from Facebook product launches in the past 2 years. We're continuing to increase the freshness and originality of content recommendations as well. On Facebook, our systems are surfacing over 25% more Reels published that day than the prior quarter. On Instagram, we grew the prevalence of original content in the US by 10 percentage points in Q4, with 75% of recommendations now coming from original posts. Threads is also seeing strong momentum, again benefiting from recommendation improvements. The optimizations we made in Q4 drove a 20% lift in Threads time spent. Turning to 2026, we see a lot of opportunity to drive additional gains. This includes scaling the complexity and amount of training data we use in our models while continuing to make our systems more responsive to people's real-time interests. We're also focused on incorporating LLMs to understand content more deeply across our platform, which will enable more personalized recommendations. Another big area of investment this year is developing the next generation of our recommendation systems. We have several big bets on this front, including building new model architectures from the ground up that will work on top of LLMs, leveraging the world knowledge and reasoning capabilities of an LLM to better infer people's interests. Beyond improvements to our recommendation systems, we expect to use the models developed by Meta Superintelligence Labs to deliver compelling and differentiated AI products. One area we're already seeing promise is with AI dubbing of videos into local languages. We are now supporting 9 different languages with hundreds of millions of people watching AI-translated videos every day. This is already driving incremental time spent on Instagram, and we plan to launch support for more languages over the course of this year. We are also seeing strong traction with our media creation tools. Nearly 10% of the reels people view each day are now created in our Edits app, almost tripling from last quarter. Within Meta AI, the number of daily actives generating media tripled year over year in Q4. This year, we expect to advance the capabilities of our underlying media generation models and ship new features to further enhance the product experience. Another area we're focused on for Meta AI is personalization. We're seeing in our early testing that personalized responses drive higher levels of engagement, and we expect to significantly advance the personalization of Meta AI this year. This dovetails with our investments in content understanding, which will enable our systems to develop a deeper understanding of each person's interests and preferences, while also identifying the most relevant content across our platform to pull into responses. Turning to the second driver of our revenue performance, increasing monetization efficiency. The first part of this work is optimizing the level of ads within organic engagement. Here, our focus remains on tuning our systems to identify the right time and place to deliver ads. In some cases, this enables us to grow the overall level of ad load while preserving the user experience. However, an increasingly important part of this work is finding opportunities to drive incremental conversions within the same overall level of ad load by determining when a person is more interested in seeing an ad. In fact, in the second half of 2025, our initiatives on Facebook to redistribute ads across users and sessions delivered a nearly 4 times larger revenue impact than Facebook ad load increases. We also continue to make progress on bringing ads to our newer surfaces. Within Threads, we're beginning to expand ads to all remaining countries this month, including the UK, European Union, and Brazil. On WhatsApp, we expect to complete the rollout of ads and status throughout the year, with the level of ads remaining low in the near term while we follow our standard approach of optimizing ad formats and performance before ramping inventory. Moving to the second part of increasing monetization efficiency, improving performance for the businesses who use our tools. We're seeing very strong results from the ad performance investments we made throughout 2025, with year-over-year conversion growth accelerating through the fourth quarter. We expect the set of investments we're making in 2026 will enable us to drive further gains as we continue to integrate AI across all layers of the marketing and customer engagement funnel. The first area is our ad system, where we're continuing to scale the complexity and size of our models to better select which ads to show. In Q4, we doubled the number of GPUs we use to train our GEM model for ads ranking. We also adopted a new sequence learning model architecture, which is capable of using longer sequences of user behavior and processing much richer information about each piece of content. The GEM and sequence learning improvements together drove a 3.5% lift in ad clicks on Facebook and a more than 1% gain in conversions on Instagram in Q4. This new sequence learning architecture is significantly more efficient than our prior architectures, which should enable us to further scale up the data, complexity, and compute we use in our future ranking models to deliver performance gains. As we scale up our foundational ads models like GEM, we are also developing more advanced models to use downstream of them at runtime for ads inference. In Q4, we launched a new runtime model across Instagram feed, stories, and reels, resulting in a 3% increase in conversion rates in Q4. We continue to progress on our model unification efforts under Lattice as well. After seeing strong success with the consolidation of Facebook feed and video models in the first half of 2025, in Q4, we consolidated models for Facebook stories and other surfaces into the overall Facebook model. This, along with a series of backend improvements, drove a 12% increase in ads quality. And in 2026, we expect to consolidate more models than we had in the prior 2 years as we continue to evolve our systems towards running a smaller number of highly capable models. Moving to the next area, ads products. We continue investing in ways to help businesses leverage AI to reduce the friction of setting up and optimizing an ad campaign. In Q4, we started testing our Meta AI business assistant with advertisers, which helps with tasks like campaign optimization and account support. In the coming months, we'll make it available to more advertisers so each business has an AI assistant they can chat with that remembers their business's goals and provides personalized recommendations on how to improve performance. Another area we're deploying AI to improve performance is ad creative. The combined revenue run rate of video generation tools hit $10 billion in Q4, with quarter-over-quarter growth outpacing the increase in overall ads revenue by nearly 3 times. We are also seeing very good results from our incremental attribution feature, which optimizes for incremental conversions in real time. Our latest model rollout in Q4 is driving a 24% increase in incremental conversions versus our standard attribution model, and this product has already achieved a multi-billion-dollar annual run rate just 7 months since launching. The last area of our monetization work I'll cover is business messaging, where we're seeing strong momentum across our portfolio of solutions. Click-to-message ads revenue growth accelerated in Q4, with the US up more than 50% year over year, driven by strong adoption of our website-to-message ads, which direct people to a business's website for more information before choosing to launch a chat. Paid messaging within WhatsApp continues to scale as well, crossing a $2 billion annual run rate in Q4. Finally, we're seeing good early traction with our business AIs in Mexico and the Philippines, with over 1 million weekly conversations between people and business AIs now happening on our messaging platforms. This year, we will expand availability of our business AIs to more markets, while also extending their capabilities so they not only answer questions on topics like product availability, but can help people get things done right within WhatsApp. We speak a lot about how AI is improving our products, but I'd like to take a moment to give an update on how it's changing the way we work. Mark mentioned our focus on making Meta a place where individuals can have significant impact. A big focus of this is to enable the adoption and advancement of our AI coding tools, where we're seeing strong momentum. Since the beginning of 2025, we've seen a 30% increase in output per engineer, with the majority of that growth coming from the adoption of agentic coding, which saw a big jump in Q4. We're seeing even stronger gains with power users of AI coding tools, whose output has increased 80% year over year. We expect this growth to accelerate through the next half. Next, I would like to discuss our approach to capital allocation. We have significant opportunities to improve our core business in 2026. We plan to continue to prioritize investing in the business to support these opportunities, while also positioning us for an entirely new and exciting product cycle over the coming years, powered by our AI models. Procuring sufficient infrastructure capacity is central to these initiatives, and we're working to meet our silicon needs by deploying a variety of chips that optimally support each of our different workloads. To that end, in Q4, we extended our Andromeda ads retrieval engine so it can now run on NVIDIA, AMD, and MTIA. This, along with model innovations, enabled us to nearly triple Andromeda's compute efficiency. In Q1, we will extend our MTIA program to support our core ranking and recommendation training workloads, in addition to the inference workloads it currently runs. More broadly, as we invest in infrastructure to meet our business needs, we continue to prioritize maintaining long-term flexibility so we can adapt to how the market develops. We're doing so in several ways, including changing how we develop data center sites, establishing strategic partnerships, contracting cloud capacity, and establishing new ownership structures for some of our large data center sites. We have a strong net cash balance and expect our business will continue to generate sufficient cash to fund our infrastructure investments in 2026, which is reflected in our expectations. Nonetheless, we will continue to look for opportunities to periodically supplement our strong operating cash flow with prudent amounts of cost-efficient external financing, which may lead us to eventually maintain a positive net debt balance. Moving to our financial outlook, we expect our first quarter 2026 total revenue to be in the range of $53.5 to $56.5 billion. Our guidance assumes foreign currency is an approximately 4% tailwind to year-over-year total revenue growth based on current exchange rates. Turning to the expense and CapEx outlooks, we expect full year 2026 total expenses to be in the range of $162 to $169 billion. The majority of expense growth will be driven by infrastructure costs, which includes third-party cloud spend, higher depreciation, and higher infrastructure operating expenses. The second largest contributor to total expense growth is employee compensation driven by investments in technical talent. This includes 2026 hires to support our priority areas, particularly AI, as well as a full year of expenses from 2025 hires. At a segment level, we expect expense growth to be driven by the family of apps, with Reality Labs operating losses remaining similar to 2025 levels. We anticipate 2026 capital expenditures, including principal payments on finance leases, to be in the range of $115 to $135 billion, with year-over-year growth driven by increased investment to support our Meta Superintelligence Labs efforts and core business. Despite the meaningful step up in infrastructure investment, in 2026, we expect to deliver operating income that is above 2025 operating income. Absent any changes to our tax landscape, we expect our full year 2026 tax rate to be 13 to 16%. Finally, we recently aligned with the European Commission on further changes to our less personalized ads offering, which we will begin rolling out this quarter. However, we continue to monitor legal and regulatory headwinds in the EU and the US that could significantly impact our business and financial results. For example, we continue to see scrutiny on youth-related issues and have a number of trials scheduled for this year in the US, which may ultimately result in a material loss. In closing, 2025 was another strong year for our company. The investments we've made to improve our business are continuing to drive strong growth, and we have an exciting roadmap this year to deliver new experiences and services for our global community. As always, thank you to our teams for their hard work and commitment to our mission. With that, Krista, let's open up the call for questions.
Thank you. We will now open the lines for a question and answer session. To ask a question, please press star 1 on your touch-tone phone. To withdraw your question, again, press star 1. Please limit yourself to one question. Please pick up your handset before asking your question to ensure clarity. If you are streaming today's call, please mute your computer speakers. And your first question comes from the line of Brian Nowak with Morgan Stanley. Please go ahead.
Thanks for taking my questions. I have one for Mark, one for Susan. Mark, one is a long-term question. As you think about ramping all this investment and the personal intelligence opportunity, the meta compute opportunity, can you walk us through a little bit how you think about the largest revenue or ROIC long-term opportunities you're trying to unlock with those over the next, call it 3, 5, 10 years through all the investment? And then Susan, a little more near term, more like 26. I think the guide is the fastest growth you've had in almost 5 years. I know you have a lot of improvements on recommendations and in monetization efficiency, but can you just sort of help us a little bit understand 2 or 3 of the biggest drivers of this inflection you're seeing on revenue in 26?
Yeah, I guess I can start with the first one. Although I have to say up front that I I think my answers to a lot of your questions on this particular call may be somewhat unfulfilling because we're in this interesting period where we've been rebuilding our AI effort and we're 6 months into that, and I'm happy with how it's going. But we are going to be rolling out our initial set of models and products and businesses around that over the coming months. And I will have a lot more to share on all of those fronts at that point. So I'm happy to offer kind of a high level view of some of the stuff, but I apologize in advance that not much of this is going to be particularly detailed, but it will be exciting as we roll it out. I think the theme on the business. I mean, this is I don't think I'm going to break any new ground here, but there are several major business opportunities that we're focused on. I think that one is just going to be improving the core products and accelerating the current business. I talked about that in terms of the connecting of the recommendation systems and the LLMs, which I think will both improve the quality of the organic experience and of advertising. We're going to see the generation of media improve the quality of content, which, coupled with the improvements in the recommendation systems, we expect to generally accelerate the quality and effectiveness of the core business, both for people who use it organically and for businesses. So I think that will have a compounding effect. And then there's going to be several many, I think, new business opportunities that come up. I mean, we have been working on Meta AI for a while. I think you're starting to see some of the way that products like that get monetized across the industry. When we get that to a scale and depth that we want, we think that there are going to be opportunities both in terms of subscriptions and advertising and all of the different things that you see on that. I mean, yeah, I think there's a number of things on shopping and commerce that I'm quite excited about that I alluded to in the comments up front. And as the models launch and we demonstrate some of the capabilities, both in the first set of models and over the year, I think the models are going to get a lot better too. We'll be able to have different products paired with those that I think will facilitate different businesses for businesses who use us and our platforms, as well as direct consumer businesses. I guess it's probably also worth flagging because I don't think either of us mentioned the Manus acquisition in the upfront comments. I think that is going to is a good example of you have a significant number of businesses that already pay a subscription to basically use their tool to accelerate their business results, and integrating that kind of thing into our ads and business manager, so that way we can just offer more integrated solutions for the many millions of businesses that use and rely on our platforms, is going to be really powerful, both for accelerating their results using the existing products that we have, and I think adding new lines as well. So a somewhat high level answer, and I think the picture will become clearer and I think more exciting if we do our jobs well over the course of the year.
Brian, on your second question, there's obviously a range of outcomes captured in the Q1 26 revenue outlook. It overall reflects our expectation for a strong quarter of growth. The range embeds an outlook for accelerated growth, and that's really underpinned by the strong demand that we saw through the end of Q4 and continuing into the start of 2026. Now, I will say we also expect foreign currency to be a 4-point benefit to year-over-year growth. So that is a 3-point larger tailwind than it was in Q4 25 as we lap the strengthening of the US dollar a year ago. But overall, we see that advertisers are responding to ad performance improvements that we made. They're driving strong conversion growth. We've made a lot of these investments over the course of 2025, including advances to our ads ranking and delivery systems, the more effective redistribution of ad load, new features and ad products like Advantage Plus, better measurement, and just a lot of great work that has helped to drive the continued performance of our ads.
Your next question comes from the line of Eric Sheridan with Goldman Sachs. Please go ahead.
Thanks so much for taking the question. Maybe two, if I could. In prior periods, you've talked about being capacity constrained internally and not having enough compute to sort of achieve the goals you have on a platform and a product standpoint. I want to know if we get any update on currently how you think about your own internal needs for compute against that roadmap. And the second part of the question would be, as we continue to see the ads business sort of scale, especially in terms of dollar growth year on year, have we yet seen the full first order effects of scaling the business against applying more compute to it? Or how should investors think about the directional relationship between applying more compute and rate of change in terms of outcomes on the monetization side? Thank you.
On your first question, we do continue to be capacity constrained. Our teams have done a great job ramping up our infrastructure through the course of 2025, but demands for compute resources across the company have increased even faster than our supply. So we expect over the course of 2026 to have significantly more capacity this year as we add cloud. But we'll likely still be constrained through much of 2026 until additional capacity from our own facilities comes online later in the year. With that said, I think, we have done a good job internally mitigating the impact of compute constraints on our business. I expect that will continue to be the case in 2026. We're continuing to focus on increasing our infrastructure efficiency in several ways, including by optimizing workloads, improving infrastructure utilization, diversifying our chip supply, and just investing in efficiency improvements as part of our core technology development efforts in areas like content and ads ranking. So that was your first question. The second question about how the ads business scales. I think I don't have an extremely precise answer to this question. What I'd say is, one of the ways that we are working to drive ads performance improvements is by improving our larger scale models, along with our lighter weight ones that we use for ads inference at runtime. We don't typically use our larger model architectures like GEM for inference because their size and complexity would make it too cost prohibitive. So the way that we drive performance from those models is by using them to transfer knowledge to smaller, lightweight models used at runtime. But I would say that we think that there is room for our larger models to benefit from having more compute. And I think as we scale up the compute available to those models and the foundational models in different areas that power the different stages of ads ranking and recommendation, we expect that we will see gains coming from that.
Your next question comes from the line of Mark Shmulik with Bernstein. Please go ahead.
Yes, thanks for taking the questions too, if I may. Mark, kind of with your comments that you kind of expect to see some meaningful changes in how work and things are done this year, I guess, would you be surprised if kind of by the end of the year, we've yet to see meaningful progress and adoption on some of the newer products and initiatives that you're launching? Or, should we just be a bit more patient on the timeline here? And then Susan, kind of with the guidance provided on OI still expected to grow kind of faster this year than last year, let's say in a few months we realize we need more investment and resources to continue to go after the AI opportunity, but perhaps macro might be a bit weaker. How hard of a line is there in terms of the tie of investment levels to core performance? Thank you.
I think the first question was asking about kind of when do I expect the product impact to be? I mean, we're going to roll out new products over the course of the year. I think the important thing is we're not just launching one thing, and we're building a lot of things. I think AI is going to enable a lot of new experiences. I outlined thematically a bunch of these in the upfront comments around, a personal AI, around LLMs combining with the recommendation systems. I think that's a somewhat longer term research project that I think will yield dividends over a long period of time, but we're already definitely seeing optimizations of the recommendation systems as we're including more of the AI research improvements and advances into that. The content is going to improve. There are going to be new formats. There are going to be improvements on the glasses. There are all these different things, as well as several things that we think are new that we're going to try that are not just extensions of the current things that we're doing. So, yeah, I mean, I would expect that we'll roll these out over the course of the year, and that sometimes it takes a few iterations for things to really hit and reach the kind of product market fit that you need. But I think we have enough time, hopefully, to, we're starting off early enough in the year that I would expect that we'll see some successes by the end of the year on this, as well as um, as well as on the work side. What we were talking about is I think it's very hard for anyone exactly to predict what the shape of how organizations working is going to feel, but I just think the fact that agents are really starting to work now is quite profound, and I think is going to allow. We're already starting to see the people who adopt them are just being significantly more productive, and there's a big delta between the people who do it and do it well, and the people who don't, and I think that's going to just be a very profound dynamic for, I think, across the whole sector and probably the whole economy going forward in terms of the productivity and efficiency with which we can run these companies, which I think, my hope is that we can use that to just get a lot more done than we were able to before. And I'm most focused on making sure that Meta is a great company to have a big impact, right? You'll be able to use these kind of agentic tools anywhere, but you will only be able to come and ship things to billions of people if you join a company like Meta, and there aren't that many companies like Meta. So, so I think if we make it so that so that we can harness these kind of tools, then I think that we should, over some period of time, start to see a real acceleration in the amount of output that we could have. Now, how to predict exactly the time frame for adopting that, somewhat hard, right? I'm not going to predict a specific quarter or something like that, but the trend seems like unmistakably like this is going to happen. And that, to me, is something that is very exciting. And like I said in my comments up front, also, like, honestly, kind of fun, right? I think it just makes it more fun to be able to build a lot of things. And that's what we're here to do.
Mark, on your second question, I want to make sure and clarify something. So I think in the question, you had said that operating income growth in 26 would be higher than 25. And I want to make sure my comments were super clear. In 2026, we expect to deliver operating income above 2025 operating income. So this is comparing absolute dollars, not year-over-year growth. So to give some context on that, we are going into 2026 with strong revenue growth at the start. Of course, we are just a few weeks in, set against, a healthy macro backdrop. So obviously hard to extrapolate the current trends to the full year. And, there are many, many moving variables in the current landscape. We're really taking advantage of the current business strength to reinvest a lot of the revenue into what we see as very attractive investment opportunities in AI infrastructure and talent. It's hard to assess, what all of those investment opportunities will be over the course of the year as we continue to work through our capacity options. And of course, it remains a very competitive hiring market, but we'd like to invest aggressively where we can. We continue to use our framework that we shared at this point several years ago of growing consolidated operating profit over time to guide those investments. And based on where our plans are rolling up today, again, in 26, we expect to deliver more operating income than we did in 2025.
Your next question comes from the line of Doug Anmuth with JP Morgan. Please go ahead.
Thanks so much for taking the questions. One for Mark and one for Susan. Mark, could you just provide more detail on the progress of the MSL team several months in, and more on your view on the path to a frontier model this year? And then Susan, I know you expect to grow operating income in 26. Do you also expect to have positive free cash flow? Just how should we think about the current and any future JVs for data center and compute build out? Thanks.
I'm not sure I have anything else to add on the current progress on this. I mean, that's why I said up front that I think this is somewhat of an unfulfilling time to be answering some of these questions. We're about 6 months into building MSL. I'm very pleased with the quality of the team. I think we have the most talent-dense research effort in the industry, and some of the early indicators look positive. But look, I think that this is a long-term effort, right? We're not here to do this to ship like one model or one product. We're doing a lot of models over time and a lot of different products. And I want to make sure that the work can speak for itself, and also that we all internalize that this is a journey that we're on, and the first set of things that we put out, I think, are going to be more about showing the trajectory that we're on, rather than being a single moment in time. So yeah, I'm quite optimistic, but don't have anything else particularly concrete to share.
Doug, on the first part of your question, we are making very significant investments in infrastructure capacity this year to support our AI efforts. And we believe we're in a strong position to support them with the cash generation of our business this year. And at the same time, we'll continue to explore different paths as we build out our infrastructure capacity that help us provide us the long-term flexibility and option value that we look for as we support our future capacity needs against the backdrop of a very wide range of possible capacity demand over the years to come. So we don't have anything additional to announce at this point. We are looking at all of the different opportunities to stand up capacity across kind of the different timeframes that we need them.
Your next question comes from the line of Justin Post with Bank of America. Please go ahead.
Great. A couple, maybe one for Mark and one for Susan. It just seems like you're going to have a tremendous amount of capacity. How do you think about expanding your opportunities beyond ads, things like subscriptions or licensing cloud models, just with all the interesting things you're building? I don't expect any product announcements, but can you do things beyond ads? And then for Susan, it's really interesting to see the acceleration, even ex-FX in advertising. I'm just wondering if you're seeing a general acceleration in e-commerce activity. Where do you think the dollars are coming from, and is the entire internet ecosystem accelerating? And just wondering your thoughts on that.
So yes, we are focused on things beyond ads. I think the numbers make it so that for the next couple of years, ads are going to be by far the most important driver of growth in our business. So that's why, as we're working on this, we have a balance of new things that we're trying to do, while also investing very heavily in making sure that all of the work that we're doing in AI improves both the quality and business performance of the core apps and businesses that we run there. But yeah, I mean, we'll have more to share on that. But I mean, all these things, even if they scale very quickly, are going to take some time to be meaningful at the scale of what the ads business is. And while we're doing that, we're just very focused on also delivering more value to businesses and more quality in the apps that we run ads in.
Justin, on your second question, we saw healthy year-over-year growth across all verticals in Q4, with the exception of politics as we lapped the U.S. presidential election last year. The online commerce vertical was the largest contributor to year-over-year growth. That was followed by professional services and technology. So in online commerce, year-over-year growth was strong. It was actually relatively consistent with Q3 levels, and that was broad-based across advertiser regions and sizes. In general, we saw that the demand leading up to the holiday shopping period that sustained through Cyber 5 and into the end of the year, was very healthy for us. Professional services, in this category, we saw strong broad-based growth with nice contributions from lead generation ads due to product improvements we've made, including from Advantage Plus lead campaigns that we fully rolled out at the start of Q4. And the tech vertical continues to be strong for us too, again, broad-based across advertiser regions and sizes. So in general, I would say it was very healthy, broadly driven growth.
Your next question comes from the line of Ross Sandler with Barclays. Please go ahead.
Yeah, Mark, you mentioned bringing Horizon World into mobile. We haven't heard much from the Horizon World squad on these calls, so interesting that that's making it in. It seems like the combo of AI and what you guys have built with Horizon might open up the door to a bunch of new potential areas in gaming or new forms of kind of communication. So could you just elaborate on what the plan is there? Thank you.
Yeah, so let me talk about the basic theme here. One core idea that I've talked about on some of these calls over the years is that people always want to express themselves and experience the world in whatever the richest format is that they can. So I talked about this up front today. When we started, a lot of this was text, right? That was the kind of the best we could do. Then we all got phones, they had cameras. Like a lot of this medium became visual, but with photos. We went through a period where the mobile networks were kind of weak, and every time you wanted to watch a video, it would buffer. And once that got worked out, now the majority of the content is video. And one of the core ideas that we have had for a while is that that is not the end of the line. Right? Video will continue to be here for a long time. It's going to continue growing. It's not going anywhere, just like photos and text in many ways continue to grow, even as the market continues to grow beyond that. But I don't think that video is the ultimate kind of final format. I think that this is we're going to get more formats that are more interactive and immersive, and you're going to get them in your feeds. So you can imagine this. I mean, there's obviously a lot of details to fill in on this, but you can imagine, being able to easily through a prompt create a world or create a game and be able to share that with people who they care about, and you see it in your feed and you can jump right into it and you can engage in it. And there are 3D versions of that and there are 2D versions of that. And Horizon, I think, fits very well with the kind of immersive 3D version of that. But there's definitely a version of the future where, any video that you see, you can like tap on and jump into it and like engage and be kind of like experience it in a more meaningful way. And I think that the investments that we've done in both a lot of the virtual reality software and Horizon, as well as a number of other areas around the company, are actually going to pair well with these AI advances to be able to bring some of those experiences to hundreds of millions and billions of people through mobile. So anyway, that's a thing that I'm quite excited about, but it's just sort of one flavor of a theme that I think is going to be very interesting. I think that there are going to be lots of different types of interactive and immersive content that become possible. And I think Horizon is going to be one very interesting example that I'm quite excited to see how this unfolds.
Your next question comes from the line of Ron Josey with Citi. Please go ahead.
Great, thanks for taking the question. I wanted to drill down maybe, Susan, on your comments around ranking recommendation model changes. Clearly lots of tailwinds here, given the results from GEMS, Andromeda, Lattice, consolidation of models, et cetera. So can you help us understand a little bit more just about the roadmap and where we stand within ranking recommendation model changes? There's a thesis out there that maybe there's a limiting factor, or maybe we're waiting on newer models, but any insights there would be very helpful as we think about the future going forward. Thank you.
Yeah, thanks for the question, Ron. We have, I was sorting out if your question was more specific to ads or if it was more specific to kind of the engagement side, but I'll try to talk a little bit about both. So on the sort of core engagement piece, we launched several ranking improvements in Q4 on Facebook and Instagram that drove incremental engagement. And there isn't really one single launch, that is driving most of the gains. It's, multiple optimizations to our recommendation systems that are helping us make more accurate predictions about what will be interesting to each person. And, I talked a little bit about some of these, the specific instantiations on both Facebook and on Instagram. And we see, a lot of headroom to improve recommendations in 2026, which we expect will drive additional engagement growth on both apps. First, we plan to continue scaling up our models and increase the amount of data we use, including a longer history of content interactions to further improve the overall quality of recommendations. We're also going to start validating the use of ad signals and organic content recommendations as we continue to work towards having a more shared platform for organic and ads recommendations over time. Second, we're going to continue to make recommendations even more adaptive to what a person is engaging with during their session, so the recommendations we surface are more relevant to what they're interested in at that moment. And finally, we will work on more deeply incorporating LLMs into our existing recommendation systems, given their capability to more deeply understand content. And so this will, I think, in particular, be useful for content that has been more recently posted, since there's less engagement data to base recommendations off of. On the ad side, again, we've talked about a lot of the sort of model work in the ads world across Andromeda and Lattice and Gem. I'll touch maybe specifically, on Gem in Q4, we extended Gem to cover Facebook Reels. Now it covers all major surfaces across Facebook and Instagram. We also doubled the size of the GPU cluster we use to train it. And in 2026, we're expecting to meaningfully scale up Gem training to an even larger cluster, increasing the complexity of the model, expanding the data that we train it on, leveraging new sequence learning architecture that we had begun deploying in Q4. And we're also going to further improve how we transfer the learnings from our Gem foundation models to the runtime models that we're using. So, there's a lot more headroom, I think, across many components of the stack. This is the first time we have found a recommendation model architecture that can scale with similar efficiency as LLMs. And, we're hoping that this will unlock the ability for us to significantly scale up the size of our ranking models, while preserving an attractive ROI.
Your next question will come from the line of Ken Gawrelski with Wells Fargo. Please go ahead.
Thank you very much. Two, if I may, please. First, for Mark, how critical is it for Meta to have a leading general purpose model, or is there sufficient capability in a model that really excels at specific use cases, maybe similar to what you see at Anthropic in coding today? We'd love to, if you could opine on that. And then second, maybe I just want to push again, maybe on this last question, Susan, on the visibility you have. You talked about the improvements you're making in 26 on the models, the fine tuning of the core, both in engagement and ad relevance. Could you talk about, are you seeing any signs of diminishing returns to those investments? And do you have visibility beyond 26 into further opportunities there? Thank you.
I think the question was around how important is it for us to have a general model. The way that I think about Meta is we're a deep technology company. Some people think about us as we build these apps and experiences, but the thing that allows us to build all these things is that we build and control the underlying technology that allows us to integrate and design the experiences that we want and not just be constrained to what others in the ecosystem are building or allow us to build. So I think that this is a really fundamental thing where my guess is that frontier AI, for many reasons, some competitive, some safety oriented, are not going to always be available through an API to everyone. So I think it's very important, I think, to be able to have the capability to build the experiences that you want if you want to be one of the major companies in the world that helps to shape the future of these products. So that I think it's going to be, I think, important from a business perspective. And I think it's just important from a creative and mission perspective to be able to actually design and build the experiences that we believe that we should be building for people. But yeah, I think it's quite important. Otherwise, we wouldn't be so focused on this. We're clearly extremely focused on this.
On your second question, interestingly, a year ago on this call, I think I talked about the set of investments we were making in 2025 as part of our 2025 budgeting process across our ads performance and organic engagement initiatives. And those investments have generally paid off, and we feel really good about kind of the process we ran in terms of using projected ROI to stack rank investments, make sure that we, had a robust measurement system, funded things that were positive ROI, and then tracking how they performed over the course of the year. And we are, we've just finished running our 2026 budgeting process, and we have funded a similar set of investments, which we expect will enable us to continue delivering strong revenue growth in 2026. Having said that, I expect both full-year reported and constant currency revenue growth to be below the levels in Q1 for a few reasons. First, we would expect that currency tailwinds will dissipate later in the year based on current rates. Second, we'll be lapping stronger periods of growth later in the year that benefited from our 2025 ad performance investments and the strong macro landscape.
Tesla should be starting
and
any
finally, we
minute
expect
now.
there could be some headwinds from our introduction of the revised, less personalized ads offering in the EU that begins rolling out later in Q1. But again, similar to 25, we feel good about the process by which we identified investment opportunities with attractive ROIs and funded them as part of our budget to support, key initiatives across our ranking and recommendation systems and to increase the capacity efficiency of our models, all of which are key to sort of driving growth for us.
Your next question comes from the line of Mark Mahaney with Evercore. Please go ahead.
Okay, two questions, please. Meta AI, any update on what you're seeing there in terms of engagement and usage? And do you think you're just starting to be able to apply improvements to that specific functionality? And then just real quickly on share repurchases, Susan, I don't think you bought any stock back in the quarter. It's been a while, maybe a year since you haven't bought anything back. You talked about capital allocation a little bit into the year. It didn't sound like you're
Good afternoon, everyone, and welcome to Tesla's fourth quarter 2025 Q&A webcast. My name is Travis Axelrod, Head of Investor Relations, and I'm joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q4 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thanks, Travis. So we've updated the Tesla mission to Amazing Abundance, and this is intended to send a message of optimism about the future. I think we're most likely headed to an exciting, amazing era of abundance, and I think with the advent or with the continued growth of AI and robotics, I think we actually are headed to a future of universal high income, not universal basic income, but universal high income. I mean, there's going to be a lot of change along the way, but that is what I see as the most likely outcome. So I think that it makes sense to update Tesla's mission to reflect that goal. And obviously along that way, we're going to keep improving safety, driving down the cost of goods, and getting people access to anything they need without compromise, and still making sure that the environment is great, nature is great, and people can have whatever they want, which seems like probably the best future. I'm open to other ideas, but that sounds like it sounds like if you could say what is the best future you could possibly imagine, I guess it would be that everyone can have whatever they want, including amazing medical care, but we still keep the beauty of nature and Earth. I think that's probably the best outcome, and we're seeing obviously the first steps along that way this year for Tesla, first major steps as we increase vehicle autonomy and begin to produce Optimus robots at scale. We're making very, very big investments. So this is going to be a very big CapEx year, as Vaibhav will get into. That is deliberate because we're making big investments for an epic future. So I think all these investments make a lot of sense. We'll continue to make sure that when we do spend capital, it is spent very efficiently. But it's a lot of things. Major investments in batteries and the entire supply chain for batteries. So we're also going to be significant manufacturers of solar cells, and we're making massive investments in AI chips. So I think these all make a ton of strategic sense. And then I guess I have like one, I guess, it's not exactly bad news, but it's time to basically bring the Model S and X programs to an end with an honorable discharge, because we're really moving into a future that is based on autonomy, and so if you're interested in buying a Model S and X, now would be the time to order it, because we expect to wind down S and X production in next quarter, and basically stop production of Model S and X next quarter. We'll obviously continue to support the Model S and X programs for as long as people have the vehicles, but we're going to take the Model S and X production space in our Fremont factory and convert that into an Optimus factory, which will, with the long-term goal of having 1 million units a year of Optimus robots in the current SX space in Fremont. So that is, I mean, slightly sad, but it is time to bring the SX programs to an end, and
very interesting.
Really, it's part of our overall shift to
very
an autonomous
interesting
future. As my profile picture on X said for a few months there, the future is autonomous. So let's say with respect to full self-driving and robotaxi, people are obviously following with very close attention the progress of FSD, and you can experience it for yourself. If you've got a Tesla, you notice with every software update, the car gets better and better at autonomy, and we're we're able to do our first rides with no safety monitor in the car in Austin. These are paid rides, so these were just sort of randomly selected paid rides with no safety monitor, and we're, I think maybe as of maybe yesterday or so, we actually don't even have a chase car or anything like that. So these are just cars with no people in them, and no one's following the car in Austin. So we obviously are being very cautious about this because we want to have no injuries or serious accidents along the way. So I think it makes sense to be very cautious, but you'll see the amount of autonomy increase dramatically, I think, every month essentially. So and then there will also be an opportunity, something we've talked about for a long time, for existing owners of Teslas to add or subtract their cars to the fleet, kind of like how Airbnb works, where you can add or subtract your house to the Airbnb inventory. And I think probably the value of the Tesla, the sort of partial people adding or subtracting their cars to Tesla autonomous fleet is probably a little underweighted by a lot of people, because we've got millions of cars with AI4 that can do this. So, it's that it might potentially, I think it will provide an opportunity for a lot of customers to earn more by lending their car to the fleet than their lease cost to Tesla. Yeah, which is it's kind of like you get in that scenario, you basically get paid to own a Tesla. It's quite a good scenario. And we expect to have fully autonomous vehicles in probably, I don't know, somewhere between a quarter and half of the United States by the end of the year, pending regulatory approval. A big factor would be if there's some kind of federal preemption for autonomous vehicles. In the absence of that, you kind of have to go on a city by city or state by state basis. But nonetheless, we even if it is city by city, state by state, we expect to be in, I don't know, dozens of cities, dozens of major cities by the end of the year. With respect to energy, the Tesla energy team has done incredible work, and the growth rate on that is continuing to be very strong, and we're building more manufacturing capacity, and expect that and energy will have very high growth for really as far into the future as we can imagine. The solar opportunity is underestimated. We think the best way to add significant capability to the grid is, or not to the grid, let's say it's powering AI data centers, is solar and batteries on Earth and solar in space. So that's why we're going to work towards getting 100 gigawatts a year of solar cell production, integrating across the entire supply chain from raw materials all the way to finished solar panels. Maybe a bit more about Optimus. We'll probably unveil Optimus 3 in a few months. And I think it's going to be quite surprising to people. It's an incredibly capable robot. And as I mentioned, we're replacing the SX line in Fremont with a million unit per year line of Optimus. Now, because it is a completely new supply chain, there's really nothing from the existing supply chain that exists in Optimus. Everything is designed from physics first principles. So that means the normal S-curve of manufacturing ramp will be longer for Optimus than it is for products that have at least some portion of an existing supply chain. Like when everything's new, the production rate will be proportionate to the least lucky, least confident part of the entire supply chain. And if there's 10,000 things that need to go right, it's, it only takes one to be slowed to lag that. But so it will be sort of a stretched out S-curve, but I'm confident that we'll get to 1 million units a year of in Fremont of Optimus 3. And this Optimus really will be a general purpose robot that can learn by observing human behavior. So you can demonstrate a task, or literally verbally describe a task, or show it a task, even show it a video, and it will be able to do that task. So it's going to be a very capable robot. I think long-term Optimus will have a very significant impact on the U.S. GDP. It will actually move the needle on U.S. GDP significantly. So, in conclusion, there's still obviously many who doubt our ambitions for creating amazing abundance, but we're confident it can be done, and that we're making the right moves technologically to ensure that it does. And Tesla's obviously never been a company to shy away from solving some of the hardest problems. I think that's kind of how you build value in a company, is you solve hard problems. It's I don't know how you create value by solving easy problems. So there's a lot of hard problems that the Tesla team is going to solve, but it's an incredibly talented, hardworking team. And I'd like to thank actually everyone at Tesla for their incredible hard work. And it's an honor to work with such a talented group. So thank you to everyone who is supporting this mission. The future is more exciting than you can imagine.
Fantastic. Thank you so much, Elon. And next we have some remarks from Vebov. Go ahead.
Thanks, Travis. So Q4 25 was an interesting quarter in a couple of respects. On the autos front, while in Q3 we saw a surge in U.S. demand before the IRA consumer credit cliff, pulling in some demand from Q4, In other parts of the world, we saw increase in demand leading to record deliveries in smaller countries like Malaysia, Norway, Poland, Saudi Arabia, and Taiwan, while continued strength in the rest of APAC and EMEA. We therefore ended 2025 with a bigger backlog than in recent years. Note that none of these countries have the latest version of FSD supervised available yet. On the storage front, we hit yet another record in terms of deployments. I would like to thank our customers and Tesla in continuing this momentum. On the automotive margins front, automotive margins excluding credits improved sequentially from 15.4 to 17.9%. The automotive gross profit was flat sequentially despite 16% lower deliveries, primarily due to regional mix as we had proportionately more deliveries in APAC and EMEA. As we look to 2026, with the progress that has been made with autonomy, our focus is on ramping production at all our factories. Our biggest constraint globally continues to be on the battery pack front. While our teams have been creative in trying to resolve the situation by now putting 4680 cells in non-structural packs, we continue to iterate, improving things from here on. FSD adoption continued to improve in the quarter, reaching nearly 1.1 million paid customers globally. Of these, nearly 70% were upfront purchases. It is important to note that beginning this quarter, we are transitioning fully to a subscription-based model for FSD. Therefore, net additions to this figure will primarily be via subscription model and in the short term will impact automotive margins. On the energy front, we achieved yet another record in terms of gross profit for the quarter and ended the year with nearly $12.8 billion in revenue, a 26.6% year-over-year growth. This was the result of high deployments in all regions and continued strength in demand for both Megapack and Powerwall. As we look at 2026, our backlog remains strong, well diversified globally, and we expect increasing deployments with the launch of Megapack 3 and Megablock. However, we expect margin compression from the increased low-cost competition, impacts to market from policy uncertainty, and the cost of tariffs. Services and others margin declined from 10.5% to 8.8%, primarily from higher employee-related costs for service centers as we start preparing for the ramp in activity from the growth in the fleet size. We did see a momentum in margin. We did see an improvement in margin from our supercharging business, which is included within services and other. Additionally, note that our robotaxi business-related costs, while not material, are also included within this. Given that we're still in the early phase of our fleet deployment and are still doing a lot of validation testing, the revenue and cost per mile metrics are not meaningful to discuss at the moment. Then on total gross margin front, we ended the quarter with over 20.1%, something which we haven't achieved over the last 2 years. This improvement came despite the impact of lower fixed cost absorption and the impact of tariffs, which were in excess of $500 million in Q4. Operating expenses increased sequentially, primarily from increased stock-based compensation for employees, and as we started recording charges for one operational milestone under our 2025 CEO Performance Award that was deemed to be probable over the WOT term. Additionally, our spend on AI-related initiatives and new products like Cybercab, Semi, Optimus, and Megapack, etc., continues to be on elevated levels, and we expect this trend to continue for the full year 2026. Net income was negatively impacted from mark-to-market charges on a Bitcoin holding, which depreciated 23% as compared to the last quarter, and the impact of unfavorable impact of FX, primarily from our large intercompany borrowings. On the free cash flow front, we ended up at $1.4 billion. We did end up CapEx being slightly below our previous guidance of $9 billion, but as Elon already mentioned, this year is going to be a huge investment year from a CapEx perspective. And at the moment, we're expecting that CapEx would be in excess of $20 billion. We'll be paying for 6 factories, namely the refinery, LFP factory, Cybercab, Semi, a new mega factory, the Optimus factory. On top of it, we'll also be spending money for building our AI compute infrastructure, and we'll continue investing in our existing factories to build more capacity. And then, also the related infrastructure along with it. And we'll also further expand our fleet of robotaxi and Optimus. While this may seem a lot, we believe this is the right strategy to position the company for the next era. And we'll make such investments, as Elon mentioned, in a very capital-efficient manner. Note that this does not include potential investments in solar cell manufacturing or our Terafab, as we're still in early phase, and we plan to provide an update in future quarters. We're starting not the next chapter, but a new book on the progression of this company. 2026 year would be when all of this began. While at times it feels daunting, it is going to be the most exciting change in Tesla's history, and we could not have even dreamed of embarking on this journey without the support of our customers and our investors. Thanks for again showing the confidence in us, and let's get ready for a future of amazing abundance. Thanks.
Great. Thank you very much, Vaibhav. Now we're going to head over to investor questions. As always, we will start with questions from say.com. The first question is, today there are approximately 90 million cars sold globally each year. Does Tesla have a view, based on its robotaxi ambition, what this number will be in 5 or 10 years? And how does this impact Tesla's EV strategy to have more models?
Yeah, thanks, Travis. As Elon said, the future is autonomous, and obviously autonomy and Cybercab are going to change the global market size and mix quite significantly. I think that's quite obvious. General transportation is going to be better served by autonomy, as it will be safer and cheaper. And over 90% of vehicle miles traveled are with 2 or less passengers now, which is why we designed Cybercab that way. In this new autonomous market, we at Tesla have the advantage of efficiency, cost, and manufacturing at scale that really no one else has. And we've built that over the last decades. And we believe that that segment that we are creating will grow millions year over year.
Just to add to what Lars said there, the point that Lars made, which is that 90% of miles driven are with 1 or 2 passengers, or one or two occupants, essentially, is a very important one, because that implies that the Cybercab, which is a dedicated 2-seater dedicated robotaxi. It's a little confusing with the terms robotaxi and Cybercab. Sorry about the confusion, but and in fact, in some states, we're not allowed to use the word cab or taxi, so it's going to get even more strange. It's going to be like cyber vehicle or something, cybercar. But the Cybercab, which is a specific vehicle model that we're making, does not have a steering wheel or pedals. So this is clearly, there's no fallback mechanism here. It's like this car either drives itself or it does not drive. And we expect to start production in April. As always, it's an S-curve of, the production rate is an S-curve, so it starts off very slowly and then grows exponentially. Then you hit the linear, and then ultimately, it asymptotes at whatever your target volume is. So, but we would expect over time to make far more Cybercabs than all of our other vehicles combined. Given that 90% of distance driven, or distance traveled, exactly, no longer driving, is 1 or 2 people. I think it's like 80% is just 1. So it would mean that long-term Cybercab would make several times more Cybercabs per year than all of our other vehicles combined.
Great. Thank you so much. The next question, a bit related. Are there still plans to launch new models to address different price segments and vehicle types which could materially expand the TAM for Tesla.
Yeah. To further on what we were just talking about, we've launched our least expensive models ever over the last few months and are continuing to expand those models globally. And over the last decade, we have continually brought down the cost of our vehicles without sacrificing range, performance, or premiumness. And we'll continue to do that, as Vaibhav said, investing in our factories. But these are all trade-offs of where we spend our time or money. And to Elon's point just now, with Cybercab coming, we are aiming to bring that Tesla premium ride experience to our largest market yet. That could be 5 or 10 times our current levels of production. This new autonomous market, you have to start thinking about us as moving to providing transportation as a service more than the total addressable market for the purchased vehicles alone. And of course, we do have plans to have robotaxis in various shapes and sizes, but obviously Cybercab will be the grand majority of that volume.
Yeah, the vast majority of miles traveled will be autonomous in the future. I would say probably less than, I'm just guessing, but probably less than 5% of miles driven will be where somebody's actually driving the car themselves in the future. It may be as low as 1%.
Great. The next question is, historically, Tesla has spoken about gross margin per model. Are there standalone gross margin targets for the current models, excluding the benefits for FSD sales?
We've talked about this with the previous two questions, but transportation, as we know, is changing. And I think we cannot keep applying the same framework from a car sales model to the future, what we are trying to do. So it has to be looked at it more holistically. Autonomy software will be the driver for growth from now on. And as we aim to maximize the global fleet, we have been laser focused on COGS from our side to make sure, because that is something which we manage. So we will keep focusing on that, but I think we need to look at it from a different dimension.
Yeah, like this Cybercab, the whole design of Cybercab was to optimize the fully considered cost per mile of autonomous driving. And it's a different design problem than if you're trying to design cars for people who will be driving versus being driven. So Cybercab is, like I said, super optimized for minimum cost per mile and also for a much higher duty cycle. So it would expect Cybercab to be used, probably 50 or 60 hours a week instead of the 10 or 11 hours a week that a driven vehicle is used. So typically people might drive their car for an hour and a half a day on average, so it's like 10 hours per week out of 168.
What's up, Ziggy? Been a while. Hope you're doing good.
I think an autonomous vehicle is likely to be used probably 5 times as often, which means that you need to design the vehicle for a much more wear and tear per unit time and much more resilience. It's more like a commercial truck. That's in continuous operation or close to continuous operation is how you design an autonomous vehicle. And so we will have larger vehicles in the Cybercab in the future that are designed for full autonomy. And we've actually shown pictures of this and in fact have shown prototypes. So this is not exactly a secret. In fact, we've given people rides in them. So, we're not keeping this, hiding this light under a bushel here. It's like we're literally saying what we're going to do and have said what we're going to do for a while. I think long term we would really the only vehicles that we'll make will be autonomous vehicles, with the exception of the next generation Roadster, which we're hoping to debut in April. Hopefully. It's going to be something out of this world.
Fantastic. The next question we unfortunately have to skip because it's not related to Tesla, and we would like to remind folks who use the Say platform to please focus these questions on Tesla. With that in mind, we're going to move on to the next question, which is, what is the current bottleneck to increased robotaxi deployment and personal use unsupervised FSD? The safety and performance of the most recent models Is it the safety and performance of the most recent models, or is it people to monitor the robo-taxis in car or remotely, or is there some other blocker? I don't know, Ashok, if you want to kick off on this one.
Yeah, we have scaled the robotaxi service that's available to customers over the last year in order to just learn the scaling problems without having to like wait for the unsupervised. Basically, like two goals. One is like learn as much as possible from the fleet with the safety monitors, and secondly, be laser focused with the engineering team to solve the unsupervised FSD problem. I think we did both. Like by the end of last year, we had a long tail of issues that we were able to churn through, and then in the last couple of weeks, we had started our unsupervised robotaxi service to public customers in Austin. I think some customers took rides last week, and also the service continues today without any rear car or something like that. Separately, we did scale the fleet size in the Bay Area and in Austin, and through that we learned issues with charging and other issues that we would have seen once we sort of like scale the unsupervised fleet. So both are happening in parallel. A variant of the software that's used for the robotaxi service was shipped to customers with V14, and customers saw a huge jump in performance, like a lot of happy feedback from customers. And since then, we have improved the software significantly as well. And customers will continue to see with their own software releases that the software is so good that they're like screaming to remove the driver monitoring software because they're bored inside the car too much.
Adding to that a little bit with what Ashok said about learning about our charging and service needs, we're using our vast network of charging and service centers that really only Tesla has in this space to jumpstart our infrastructure build-out needs to get ahead of robotaxi and autonomous vehicle demand. And we expect that because of this network, we are the only company capable of scaling at the rate that is needed for the tsunami of autonomy that is coming.
Yeah.
Great. Moving on to the next question. After the unveil of the Cybertruck, Elon stated that if it didn't sell well, Tesla would build a more conventional-looking pickup. How practical would it be to create this new design on the Cybertruck architecture, and could it be conveniently built on the existing production lines?
Actually, in its segment, Cybertruck continues to be a leader and is selling more than any other electric truck out there, while our competition continues to pull back. But to the question itself, from a line standpoint, we always design our lines to be super flexible. We built 3 and Y on the same line. We built S and X on the same line still, showing that we can do that. The Cybertruck line was designed in the same way and is one of our most fully ready for autonomy platforms.
Yeah. We will transition the Cybertruck line to just a fully autonomous line. And there's obviously a market there for cargo delivery, like you say, like localized cargo delivery within a city, within a few hundred miles, something like that. There's a lot of cargo that needs to move locally within a city, and an autonomous Cybertruck could be very useful for that.
Great. Moving on to the next question. Regarding Optimus, could you share the current number of units deployed in Tesla factories and actively performing production tasks? What specific roles or operations are they handling, and how has their integration impacted factory efficiency or output?
Yeah, I mean, we're still very much at the early stages of Optimus. It's an R&D, still in the R&D phase. We have had Optimus do some basic tasks in the factory, but as we iterate on new versions of Optimus, we deprecate the old versions, and so it's not I wouldn't say it's like it's not in usage in our factories in a material way. It's more so that the robot can learn. We wouldn't expect to have any kind of significant Optimus production volume until probably the end of this year.
Great.
Adding to it, like Optimus Gen 3 is an awesome robot that
it is awesome.
It's an awesome robot that minimizes any differences. Like it looks like a human. People could be easily confused that it's a human. And this helps our strategy for the AI too, because you can learn from how humans do these tasks, and it's very easy to teach the robot to do in the same way as opposed to previous robots.
Yeah, I mean, I guess one thing I should say, is there's a lot of news of various companies announcing layoffs and whatnot. But at our Tesla, factory in Fremont, we actually expect to increase headcount over time, and to significantly increase output from our factories. So we don't have any layoff plans. We expect to actually increase headcount.
Great. The next question, similar to the other autonomy questions, but slightly different. When is FSD going to be 100% unsupervised?
Well, it is 100% unsupervised in FSD. Is 100% unsupervised. I mean, we obviously have cars operating with no one in them and no safety monitor and no follow car or anything like that in Austin right now. For customers, we're being just very cautious with the rollout. I mean, with each successive version, as we prove it out, and we make sure that there are no sort of unique issues in particular cities, because sometimes you get some very difficult intersection, and it'll be an intersection where a lot of humans have accidents. By the way, there's some pretty nutty intersections where there are a lot of humans make mistakes and have accidents in various cities. So we want to make sure that FSD can handle those unusual intersections. Like if you take LA, for example, where Wilshire and Santa Monica combine is there's about, I don't know, 20 traffic lights, and people are constantly having accidents there. So you want to make sure that FSD can handle unique things in a particular city. And we're also just being paranoid about safety. But with each successful release of FSD, we will reduce the amount of driver monitoring that's needed proportionate to the safety of the FSD build.
Great. As it relates to robotaxi, what has surprised you about the rollout so far? We've talked about what's constrained the fleet expansion to date, but it appears there are 200 vehicles based on public tracking. Is that something that we can confirm?
I wouldn't say there's anything that really surprised us because we had a large fleet, we had all the metrics, so there was not sort of a surprise. It was just continued work to grind down on the long tail of issues, and that's what enabled us to launch the unsupervised service in Austin.
Yeah, and I mean, in terms of robotaxi vehicles carrying paid customers, I think we're well over 500 at this point between the Bay Area and Austin.
There's varying amounts of vehicles depending on the load, but you can have more vehicles during peak times and then fewer vehicles in the off hours.
Yeah. This will probably double every month type of thing. It's on an exponential curve.
I mean, one other thing people forget that we've been deliberate on all this in the sense that we have the supporting infrastructure already been in place, whether it's service centers, charging. Yes, we'll have to augment as the fleet grows, depending upon the density of where the demand is and whatnot. But it's not something like we just stumbled upon it and we're starting to. We've been at it for years. Yes, not every city is designed the same way. Same thing, our infrastructure is also not the same in every city, but you have to give us credit that it's been a journey. And like Lars said, if there's some company which can do it, we've already been at it, so we should be able to deliver much better.
Great. The next question is about chase cars, which we already covered. So moving on to the last question. Elon, you've been spending significant personal time on Tesla's chip design.
Yeah.
What was the forcing function behind this increased involvement? And do you think external chip sales will represent a significant portion of Tesla's valuation by the end of the decade?
Well, I mean, I tend to spend time on whatever the most critical issue is for the company, and completing the AI5 chip design and having it be a great chip is is arguably the number one most critical thing to get done, which is why I'm spending more time on that than currently anything else at Tesla. Spend pretty much every Saturday on this, and a chunk of every Tuesday. So it's like if I'm spending my Saturdays on something, it's going to be something pretty important. I do think AI5 will be a very good chip, and I feel quite confident about the design at this point. And then AI6, which will follow that, it'll be aspirationally would follow that in under a year, will be yet another big leap beyond AI5. So I feel pretty good about our chip strategy right now. But in terms of selling it outside of Tesla, we first need to make sure we have enough chips for all of our vehicle production and all of our Optimus production, and then we will actually use the AI5 chips in our data centers. We already use the AI4 chips in our data centers. So when we do training, it's a combination of the AI4 chips and NVIDIA hardware primarily that we do training with. So, but you say by the end of the decade, I mean, that's like things are changing so fast that it's hard to imagine like what happens at the end of the decade. I mean, we might. I mean, when I look ahead at say what's the limiting factor for Tesla growth, if you go say 3 or 4 years out, I think it actually is chip production. Is there enough AI logic and enough memory, enough RAM for our volume, and right now I see that as being the thing that probably limits our growth in 3 or 4 years, which would imply that we're not selling chips outside of Tesla because we need them. In fact, I think I think it's going to make sense, and this is definitely going to be a sort of a controversial thing, but I think Tesla needs to build a terafab. I mentioned this at the shareholder meeting, but even when we look at the output of the best case output of all of our key suppliers, and I'd say even they're beyond suppliers, they're like strategic partners like Samsung, TSMC, and Micron. And we say like, what's the most you could possibly make? Then it's not enough. So I think in order to remove the constraint, the probable constraint in 3 or 4 years, we're going to have to build a Tesla terafab, a very big fab that includes logic, memory, and packaging domestically. And that's actually also going to be very important to ensure that we are protected against any geopolitical risks. I think people may be underweighting some of the geopolitical risks that are going to be a major factor in a few years. So now, a lot of people will say that's crazy. Fabs are really hard. I'm like, yes, I know fabs are really hard. I don't think they're easy. But
we do hard things.
We do a lot of hard things. We didn't used to have car factories. We didn't used to have battery cell factories or lithium refineries or mega pack factories or all these other things. We figured it out. So I think it's. I think if we don't do the Tesla terafab, we're going to be limited by supplier output of chips, and I think maybe memory is an even bigger limiter than AI logic. So for example, we have chip supply deals with TSMC in Arizona and Samsung in Texas, but but currently there are no advanced memory fabs at scale in the United States. There are zero, literally zero. Hopefully, Micron will have something going in a few years because they're all headquartered in Idaho, where they make a lot of potato chips. We need to make computer chips too. Anyway, we're working with our strategic partners on the chip front, memory and logic. But I think we got to also try our hand at building a large scale fab that integrates logic, memory, and packaging. And if we don't do that, we're just going to be fundamentally limited by supply chain, especially if there's some in a worst case geopolitical situation, it would be quite a severe situation. So I think it would be, quite frankly, it'd be crazy not to try the Terra fab. So yeah,
great.
We'll have a bigger announcement on this in the future.
Awesome. With that, we're going to move on to analyst questions. The first analyst is Emmanuel from Wolfe Research. Emmanuel, please feel free to unmute yourself.
Great, thank you so much. It's Emmanuel Rosner from Wolfe Research. My first question is on the CapEx. You signal a pretty large increase to over $20 billion for this year. Was hoping to better understand where the investments are going. Any way to dimension for us which of the product line or technologies account for the bulk of the increase? And also, do you view this as like one time in nature, 2026, or I guess how much of this is an ongoing level of high spending for a number of years? And then just finally, still on that, with that level of spending, you're going to be burning cash. How should we think about cash balance or any other way to finance this?
Yeah, so, Emmanuel, I tried to put this in my opening remarks too, but I'll try and go a little bit deeper. There's about 6 factories which we are starting production in this year. So there's a lot of CapEx, which is going into that. Then as we are trying to scale Optimus, we need a lot more compute. So we're putting more money towards compute as well. And
so
then
for training.
For training.
Yeah.
And then we're also going to be spending money to expand the capacity at existing factories. On top of it, we're just keep in mind that none of these numbers which I shared of 20 billion factors in anything to do with the solar fab or the semiconductor chip fab. Those would be, as Elon mentioned, would come later on. And you think your second part of your question was, is this one-off or would we expect more? I think we're getting into this investment phase because we have big aspirations. And when you look at it, some of these aspirations are, I call them as infrastructure play, especially if you have to do a chip fab and we have to do a solar cell manufacturing fab. Those are infrastructure plays. And that funding takes a little bit longer. And you would be in an investment cycle for a little bit longer. Initially, third part of your question was, how are we going to fund it? Initially, obviously, we have over 44 billion of cash and investments on the books. So we'll use our internal resources, but there are ways where we can fund it, especially when we look at the robotaxi fleet, because, anytime you have a consistent stream of cash flow, you can go and get money from the banks. And we have had conversations with banks about it. And that is something, how we're going to do it. And then on the infrastructure play side, yeah, like I said, we don't have a number yet. But given that it's an infrastructure play, it's a longer tail, we will have to look at a little bit more in terms of how we fund it, whether it's through more debt or other means.
Great. Our next question comes from Andrew from Morgan Stanley. Andrew, please feel free to unmute yourself.
Great. Thanks so much for taking the question. I just want to start on the xAI investment that you guys announced today. You talked about there being some collaboration, between the companies. So I'm just hoping to get more information, or if you're hoping that you could shed more light on what that looks like, and maybe how the work xAI is doing can be leveraged at Tesla and vice versa.
Yeah, I mean, if you looked at the disclosure, which we also put in there, we do talk about this is literally a furtherance of our Master Plan 4. And even today, if you look at Tesla vehicles, we are using Grok in there. And as we look at things, whether we can do it ourselves, yes, there are a lot of things which we can do ourselves. But if there are things which xAI can help accelerate our progress, then why should we not do that? And that is the reason why we've gone ahead with such an investment, because this is part of the strategic initiative. Because as it is, if you remember, I talked about how many things which we are doing ourselves. If there are ways and means we can find efficient ways for others to help us, and xAI literally fits into that mold. So that's why we went ahead with it.
And we just had like a lot of investors ask us to do this. There was like a lot of investor, Tesla shareholders said like we should invest in xAI. So that's like we're just doing what shareholders like asked us to do pretty much. But Grok will be I think very helpful in say maximizing the efficiency of the management of a large autonomous fleet. So I mean, if you've got an autonomous fleet that's in the future 10 million vehicles or tens of millions of vehicles, then optimizing the efficient use of that fleet, Grok will be I think way better than any heuristic solution or sort of manually managed solution. And if you say managing say a large team of Optimus robots to build a factory or build a refinery, and say a rare hypothetical this is a hypothetical example, a rare earth ore refinery, which we do desperately need in America. Then you say, well, what's going to organize the Optimus robots to build that ore refinery? That would you kind of need an orchestra conductor, and so then Grok would be kind of the orchestra conductor for the Optimus robots to build the hypothetically and it might not be hypothetical in the future. I'm just saying it's not currently on our plans, but we do need a lot more ore refining capacity in the U.S. So then what's going to manage? Let's say 1,000 Optimus robots to do.
What just happened? Did Elon just die, bro? Elon!
You're on mute right now, so I'm not sure if you're trying to
come
ask
back, Elon. I always forget that you work at Tesla, Isaiah.
Ready.
We're going to move on to the next question, which is coming from Dan Levi at Barclays.
I always forget you work there.
Dan, please feel free.
Great. Thank you.
Oh, there we go.
Elon, you talked about some of the constraints on memory. Given the very tight supply, are there any near-term constraints on procuring memory? And if there are, to what extent could you look at modifying the functionality in the vehicle, similar to what you did in 21 when we saw shortages on MCUs? And maybe how are you thinking about bridging in the next few years?
Well, the Tesla AI is very compute efficient and very memory efficient. So I think one of the metrics one should consider for any given AI model is the intelligence per gigabyte, especially when you're constrained on RAM. Having an AI that has very high intelligence density per gigabyte. So you can say like for a given number of gigabytes, how much functionality can you get out of it? I actually think Tesla is ahead of the rest of the world in intelligence density of AI by an order of magnitude or more. Like this is going to sound like a pretty bold statement, but I kind of know what the intelligence efficiency of the big models are, like Grok, and like the honest and a bunch of the other models, and I Tesla's AI is like, in terms of its memory efficiency, I think more than an order of magnitude better. So that puts us in a pretty good position actually for scaling, and we actually do think that we do have a solution for logic and memory for, let's say, the next roughly 3 years. But if you start going beyond 3 years, and we look at the scaling plans and how many fabs are getting built, and especially if you factor in geopolitical uncertainty, there's always risk that maybe those chips don't arrive that people were expecting to arrive. So that's why I think we need to have more fab capacity in the U.S. Just in case chips don't stop arriving for any reason. But, this is really existential for Tesla, because if Optimus is completely useless without an AI chip. It's not like, at least the cars we can put steering wheels and pedals in, or retrofit them if need be. But Optimus is just a mannequin without, it's like the Tin Man or whatever from the Wizard of Oz. But even worse, at least the Tin Man could walk. Optimus won't even be able to, or just sit there without an AI chip. So we've got a good solution for a significant scale through, for the next roughly 3 years. Beyond that, we will be supplier limited, and so we've got to figure out some game plan to not be supplier limited.
Great. Our next question is going to come from George at Canaccord. George, please feel free to unmute yourself.
Hi, everyone. Thank you for taking my question. So there's been a surge of startups, particularly from China, entering the humanoid market, and wondering what the long-term competitive advantages that keep Tesla ahead are, and how, based on what you've seen, will Optimus fundamentally differ from these competitors? Thank you.
Well, I do think that by far the biggest competition for humanoid robots will be from China. China is incredibly good at scaling manufacturing, actually quite good at AI, as you can see from the open source, or not the open source, but the sort of, I guess some of them are open actually, but basically the models that China is distributing for free are actually quite good, and they keep getting better. So China is very good at AI, very good at manufacturing, and will definitely be the toughest competition for Tesla. To the best of our knowledge, we don't see any significant competitors outside of China, but China will definitely be tough competition. There's no two ways about it. I always think like people sort of outside of China kind of underestimate China. China's an ass kicker next level. So, I guess, we're going to build. We think Optimus will be much more capable than any robot that we are aware of under development in China. So we think we'll be ahead in terms of the real world intelligence, the electromechanical dexterity, especially the hand design, which is by far the hardest thing in the robot. And in fact, I'd say there's really three hard things about humanoid robots. Building an incredible hand that has the same degrees of freedom and dexterity as a human hand is an incredibly difficult engineering challenge. Then there's the real-world AI and scaling production. Those are the three hardest problems by far for humanoid robots. I think Tesla has, is the only company that actually has all three of those components. So, yeah.
Great. And our last question is going to come from Colin at Oppenheimer. Colin, please feel free to unmute yourself.
Thanks so much. Guys, you talked a lot about the CapEx spend, but this is an incredibly ambitious technology development program that you're talking about. Can you talk a little bit about the R&D spend and how you're thinking about the synergies of the different components, particularly on the hardware side? If you think about, batteries into chips, into memory and the efficiency of the system, and what sort of advantages you think you'll end up getting out of, some of these purpose-built devices that you'll end up integrating into multiple end markets.
Well, really all we're trying to do is make sure that we can scale to very high volume with autonomous vehicles, with humanoid robots, and that we address geopolitical risk, which I think, there's so many companies out there that are asleep at the switch with regard to geopolitical risk. They're like, or they just have their head in the sand and hope nothing bad will happen. I'm way more paranoid than that. I always think of Andy Grove's famous statement, "Only the paranoid survive." Why did he come up with that statement at Intel? Let's think. So I think there's a lot of wisdom in that statement. So we're going to be paranoid and make sure that we can continue to build batteries and robots and AI chips no matter what happens. And companies that don't do that, a bunch of them will cease to exist.
Yeah, remember, all this comes out of necessity. It's not that we want to do it. It's just we have no choice.
Yeah, we built the most advanced lithium refinery in the world, by the way. It's not just, like our lithium refinery in Corpus Christi is not just a copy of what others have done. It's an entirely new process that is fundamentally more efficient and more advanced than anything else in the world. The same is true of our cathode refinery here in Austin. And we wish others would build this. Can other people please, for the love of God, help? In the name of all that is holy, can others please build this stuff?
It's not the first time you've asked.
Exactly. This is not the first time you've said something like this.
Like, why do we have to build these things? Why can others not also please, can someone else build these things? It's very hard to build these things. We build them out of desperation. Not because nobody else is building lithium refineries and cathode refineries. We're pretty much not just the largest, but also the only lithium refinery and cathode refinery in America. So we're making moves to make sure that no matter what happens, Tesla will prosper.
Great. Unfortunately, that's all the time we have for Q&A today. We really appreciate everyone's questions, and we look forward to talking to you next quarter. Thank you very much, and goodbye.
Cool.
What an abrupt ending. That was an abrupt ending. That was alright. That wasn't bad. Appreciate everyone sticking around. I enjoyed that. That was a really good earnings call. Really good. It's nice to hear from a CEO who's actually like transparent and not just trying to pump the AI narrative, It's nice to hear from someone who's, I don't know. I enjoyed that, because usually when you listen to anyone else who's like in the AI business, you don't get that much transparency. Why do you think chips won't stop coming, though? I don't necessarily agree with that. If they start doing mass production on cybercabs and Optimus robots and other businesses follow, you're going to be having more production of technology type products that need chips than ever before. So I'm curious why you think that chips won't stop coming when production of products that need chips is probably going to 5 to 10x in the next few years. I'd be curious on your opinion there. $5,500 gold. Yeah, it's ripping. It hit 55 actually. At least the gold futures. Gold futures are already at 55. If they grow faster than chip production. Oh, I'm asking Isaiah in the chat. I probably should have made that more clear. That question was for Isaiah. Because that's what I think. I think if they get to the point of mass production for robots and cybercabs, they're going to be producing way more. So to me, I feel like there could be a point where chips aren't as accessible, and then they have all these cybercabs and Optimus robots just sitting on the line with no chips to put in them. Like that's an interesting scenario. But Isaiah's got to be careful with what he says. He's sort of an insider, so he's got to be careful. So I don't know if he'll answer. I love during the stock earnings call, I just spam tweets. It kind of works. It kind of works. It's pretty interesting. Just spamming those tweets out. Like 20 posts. There's a lot of posts. Then you just delete them till the next earnings. I'm sure the people who follow me don't appreciate it, but I don't really care about followers on Twitter. I don't even like Twitter. I just have it. I'll step out. I wasn't listening good enough, working and lurking. Nah, that's all good. He's not going to answer my question anyway. It's all good. Oh, wait, here we go. We just need more production coming from other sources as well to keep the market open, which as far as I know, it's being worked on already. Too much money from the ground up to pass. Okay. I see. But do you think... Even if production does increase on the chip front, do you think like the mass production of Optimus robots and cybercabs even still will outpace the production of chips? And also, even if they do increase the production of chips, a lot of those chips are gonna be outdated in the next few years after they're created. So how... I mean, I guess you can just recycle old chips. I don't know. It's very interesting. That part's interesting. It makes me feel like Elon isn't full... Like, he's very bullish on the future of AI and, like, Optimus and cybercabs and stuff like that. But he also sees the potential risks of it not working out. Hey, much love, Rosh. Appreciate you, bro. Appreciate you. No, it's real early, but starting now is necessary. Yeah, okay. I gotcha. Yeah, that was a really good. I think I'll be participating in Tesla earnings more often going forward because that was really good. Wasn't that great of a stream. I mean, we got a decent amount of views, but there wasn't that many people here. There's too many people streaming about this. But personally, I just enjoyed that. I thought it was a very insightful earnings call. But anything else before we go? Is there anything on Reddit? Anything on Reddit? Doesn't look like it. Jerome Powell was cool. Yeah, I enjoyed Jerome. Even though he mostly just repeats the same things over and over again. You know, it's our last year, or this is our last year with Jerome. This is our last year. So that sucks. Jerome's been the Fed chair ever since I started trading stocks. So it's gonna be weird. It's gonna be weird not having Jerome being the Fed chair. Yeah, there's nothing up on this. I'm blocking this guy. I don't know why it keeps posting this fake trader, bro. I hate fake traders. They're annoying. Fake traders are quite annoying. Ah, NFL Street. What a fire game. What a fire game. I missed that game. It's a really good game. Can you buy NFL Street on Steam? That'd be so fun to play. I would enjoy that. I think I've looked this up before, and I don't think you can. What did I miss? Give me the TLDR. You didn't miss anything, honestly. Just Jerome Powell. Interest rates stayed the same. Labor market's stabilizing, but still weak. Inflation's still whatever inflation's been doing. Flat, but going up at the same time. Yeah, not much to talk about. If you're looking for GameStop things, there's literally nothing to talk about on the GameStop front. Can you not buy NFL Street anywhere? Don't look like. NFL Street Reborn. Mod of classic EA big game NFL Street. Oh, it's a mod? That's kind of cool. Wait, is that new? I don't think I'd want to be downloading this onto my accounts or on my computer. Seems a little sus. Seems a little sus. But that would be really fun to play. That'd be really fun to play. Tesla latest forward-looking news? No. Not really. I mean, they're stopping production of the S and X. focusing on the Optimus and the Cyber Cab. But he did talk about that Terafab facility they might make to increase chip production. I'm starting to think the barking puppy stuff is just a shit coin he's about to pump. I think so as well. I've been thinking about that for a while. It was interesting when nobody was paying attention to it. But now that everyone's pumping it and talking about it, it definitely seems a little sus, huh? Definitely seems a little sus. That's what the SNL, yeah, he just said it weird. He just said it weird. But yeah, they're stopping production of that. Kitty got a piece of the market, now his bro's trying something maybe. Or it's not even his brother. And everyone just pumped the account for no reason. I wouldn't be surprised by that. It's happened many times before throughout this investment. I mean, what was the last one? There's been a few. There's been a few accounts that got pumped throughout this investment. It just is what it is. That's why I don't focus on that stuff really, because it's, I mean, anything outside of the price action is kind of bullshit. I've never, even like real legitimate news, I've never put weight on it. It's doesn't really matter. This dude's a shill. I have more GameStop shares than you'll ever acquire in your life, so you can think I'm a shill all you want, but I'm the biggest GameStop investor you know that you've ever interacted with outside of Twitter. So go ahead and think what you want, buddy. Not surprised of anything these days. Only the good tin. I mean, I would hope. I like to hope that he's not a dude trying to fucking pump a meme coin, but it's definitely not real. I have 60k shares. No, you don't. You're full of shit, dude. You're full of shit. Dave Eaton live stream. Let's see what this guy. Let's see what your live stream looks like, bro. Let's see. Let's see what Dave Eaton got with his 4 subscribers. You think he's got you think he's got 1 million in shares? His whole stream is nothing. He doesn't even know how to do a live stream properly. You think this guy's got 1 million shares? Or $1 million in shares? Yeah, probably not. Probably not. He doesn't even know how to run a live stream, bro. That's crazy. That's crazy. Look at this fucking guy, bro. You think this guy has 60k shares? I doubt it, bro. I doubt it. I fucking doubt it. Good for you if you do, but you should probably shut your fucking mouth. Well, I guess you're not talking, you're typing. Keyboard warrior. Alright, well you can be banned from my stream then if you think I'm a shill. I definitely have more GameStop shares than you, bro. You have $1 million in GameStop shares and you're sitting in my stream calling me a shill? Yeah, right, bro. Yeah, fucking right. You probably have like 6 shares. I could believe that. I could believe that. Some loser in my stream calling me a shill because I don't believe in barking puppy dog shit. Yeah. Oh, God. If you have $1 million in GameStop shares, Like, that's impressive, but you yourself are a fucking loser, so, you know, money will never change that. You're gonna be a loser with $1 million. You're gonna be a loser with 10 million. You were a loser with $10. Nothing's ever gonna change that, bro. So, God bless you if you actually have 60K shares. Maybe you'll be able to become a better person outside of that. Maybe you'll contribute something to the world besides being a fucking loser. Coming on my stream talking about nothing. Crazy. Crazy. My bad that I don't believe in barking puppy fucking bullshit, bro. Oh, man. Imagine having $1 million in shares and being like, yeah, barking puppy's legit. Barking puppy's the man, bro. He's gonna take me to the moon. Yeah, okay. Yeah, you have $1 million in shares. Okay. 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 That's a good one. That's a good one. Damn, it's already almost 5. We've been streaming for 5 hours. What the hell? What the hell? That's crazy. That's crazy, chat. That's a long stream, even though the past 2 hours was just earnings calls. It's kind of nice. Kind of nice. What's up for tomorrow? Good question. Good question. What is tomorrow? I think you have Apple tomorrow, right? Yeah, Apple, Visa, Western Digital. SanDisk is tomorrow. I know you said that one. SanDisk is tomorrow. Weyerhaeuser, Deckers, Eastman Chemical. Some banks. So yeah, Apple. You know, Apple's probably what we'll end up streaming about. Unless, how much up is Western Digital? I haven't looked at Western Digital in a long time. Holy shit. Maybe we'll stream about Western Digital. Holy shit. So it's up a cool 500% this past year. It's only up a cool 500%, 60% since the start of the year. Like, holy shit. Maybe we'll stream about Western Digital tomorrow, not Apple. I don't know. I don't know if Apple's as relevant as this. I mean, of course, Apple's... I would much rather listen to the Apple's earnings call and cover the Apple earnings, but Western Digital, holy shit. That is crazy, son. That is crazy. So, we're probably going to stream about Western Digital tomorrow. That seems like what's going to happen. Holy fuck, that's up a lot. That's crazy. That's crazy. And maybe we'll be able to catch, like, the end of the Apple earnings call, maybe. Because Western Digital starts a little bit earlier. But that's wild, bro. That's up massive, bro. That's 600% gain. Oh my god. I mean, in 5 years, 600% gain, but realistically, you're like 10x in 6 months. That's fucking crazy, dude. That's insanity. What the heck? Bro. That's massive. Yeah, so Western Digital is probably going to be what we're streaming about tomorrow, I'd imagine. Some power pack posts. I wonder what it's like to pull a good card on power packs. Never done it before. Never done it before. Wonder what that's like. Yeah, that's massive. That's crazy. Yep. Well, I think I'm gonna get out of here, chat. Unless you guys got something. Unless you guys got something to talk about. What's up, Varley? We just got done with the Tesla earnings call. But I'm about to get out of here. If there's nothing to talk about. Doesn't look like there's anything to talk about. So I guess I'll catch you guys tomorrow for Western Digital earnings and Apple. It'll be a good time, I think. I think it's gonna be a good time because everyone should be focusing on Apple as far as like other content creators, and we'll be focusing on Western Digital, so should be good. We'll see. Holy shit, gold is still ripping. Gold just tapped 5,600, or the futures. Wild, bro, wild. Gold is ripping. Alright. Yeah, I'm out of here. Later, Muma, Ruben, Aaron, Varley. Appreciate you guys. Thank you guys for always supporting the stream. Unknown, if you're still here. Much love. Isaiah, I don't know if you're still here, but much love, bro. I don't know who's still here, but I appreciate you. Thank you guys for always supporting the stream. If you're new here, thanks for giving the stream a chance. Hopefully we see you again. God bless you guys. And yeah, hopefully we'll see some of you guys again in the next stream for Western Digital tomorrow. Western Digital, well, and Apple, but like I said, we're going to be covering Western Digital mostly, just because the stock's up fucking crazy. So, you know. But I appreciate you guys. Thank you guys. I'll catch you tomorrow. God bless ya. Peace!